All right. Good morning, everyone. Welcome, friends, family, trolls, and whatnot, to the 5ers live trading room. It's very dark behind me, as you can see. It's pitch black. It's incredible. I'm doing some renovation in the office. I'm getting a nicer background, some colors, some plants, and other cool things. Maybe bigger TV. So yeah, got that all set up for you guys tomorrow. Today we have a very exciting session for you guys. Very exciting session. A lot going on today. We got me, myself, and I will be sharing a trading system. The system that got me funded with the 5ers. I will show you the actual first evaluation and how I use the system to get funded on that evaluation. I will show you some back testing data to actually prove to you that it's profitable. There's a lot of courses out there saying like, trade this system, but then when you actually have the proof, it kind of means a lot in the trading space. Shall we show you that? It's not a ready-made system. It's not a system that's made to like just copy. It's a system that is made to be a template for you to optimize it for yourself and perhaps help you get through your evaluation phase as well. Okay, so let's go. Yeah, Mark, gotta treat the trolls as well. They're here. They're good for content. Good for content for sure. Welcome everyone. So how many likes do we have? Let's check the like meter. We've only been live for a couple of minutes, but we already have quite a few people in here. We're going to do a giveaway today as well. So I'm going to give you a system. We're going to give accounts because we hit 60K. We're going to be celebrating the fact that we hit 60K today. And then and we have a lot of people coming on. We got myself, we got Pedro, we got Victor later, we got Mike from ABL, we got Alex, we got Griff, we got Diana, we got Victor again, and then we got Ashley, and we also have Mickey from Trade the Pool jumping in a little bit later in the live stream to talk about, well, guess what? Trade the Pool, where you can trade stocks just like you trade Forex at the 5ers. Pretty cool. So if you're trading Forex, you do that at the 5ers. If you're trading stocks, obviously you do that at Trade the Pool. Really cool setup. For those of you who do not know, Trade the Pool is a sister company of the 5ers. Let's see how many likes do we have. Gotta get that number up because I have a plan. I have a plan of sharing the details of my system once we hit 100 likes. Okay, now YouTube needs to verify that it's actually me. Okay, so I gotta log in, gotta verify. Yes, I am the one that I say I am. I gotta check my phone. Gotta accept myself as me. Yes, it is me. Number, yes, number. Maybe I shouldn't be doing that live. Hopefully you didn't see that because that's probably okay. We got 70 likes to go. 70 likes to go, and I will be starting to share my system with you all. I will start preparing some things here on the back end, like showing you the evaluation account. Are we free falling on EU? So we are free falling on EU. Yeah, I don't know if this is free falling. Let's look at the 1 minute. Free falling. We're kind of free bouncing. Is this not sure? Well, maybe you have your chart inverted. You should probably press Alt plus I on TradingView to make sure you do not have it inverted, because this folks is sure on the lower time frames we're going perhaps lower, but I mean you gotta look at the daily. That is one beautiful bullish engulfing outside bar, whatever you want to call it, at that support level. It's looking pretty good, but we got a rejection here at the middle of the range. We are still range bound on your USD, although I do believe we have bearish characteristics within this range. I do think it's a matter of time until we break down, but I don't think we're there yet. Just yet. We got 34 likes. Make sure that everyone's watching right now. You gotta hit that like, because I do see that we have around 100 people watching the video. If all of you 100 people can like the video, then we will reach that target of 100 likes very quickly. Okay. But I guess, how are you liking that the active and disabled tabs that we have in the 5ers hub right now? I absolutely love it. Being able to, remove all the disabled accounts is definitely really great. Okay, so it was a long time ago since I got funded on that hypergrowth account. It is now scaled to 160, but let's look at the first evaluation phase. Where is that one? High stakes, hyper growth. Wait, is that one actually, did that one get deleted for some? Did I delete that one? That would have been very good for this for this reason. Let's take a look. I got so many accounts on here, man. Okay, so it's supposed to be a high stakes, no, a hyper growth. Okay. All right. Looks like that one is deleted. I probably asked, because I do have a lot of accounts that we do work with in the challenges. So I asked the team to open up a demo account so I can trade, in versus viewers. And then sometimes I asked them to remove them. That was before we had the disabled and active tabs. So it does look like I don't have that one anymore. That is a shame. Okay, whatever. Let's look at the no, Mark, that is, what's up, Ashley? Good morning. No, Mark, that is not the account that I bought recently. This is the account this is my bigger funded account, and I've been trading that one since 2023, I believe. Okay, so let's look at the actual backtesting data then. We can start with that. Let me share the backtesting template with you guys. Let's look at that one. It should be this one right here. So when developing a trading system, obviously you want to first do some manual backtesting to make sure that it's working. And then, of course, if you can automate that and put it into a script or automatically automate that obviously helps as well. And by the way, I am running a backtesting software right now in the backend. So if there's any lag, if there any lag with the camera or the audio, please let me know, and I will have to pause that backtesting running in the backend. It's quite requires a lot of CPU to actually run it. So it might affect the live stream. Right, okay, so here is the backtesting template, and as you can see right here, I've done testing for, let's see, 2018, and then I have 2019, we do have for 2020, and you can see here that all the tabs here at the bottom is obviously, it's from 2018 to 2023, and I've backtested it on all the pairs where I have so I have tested this on all the pairs where I'm trading the system to get individual stats on each pair. Now, what I've done is I've manually gone through the whole of 2018 in replay mode in trading view, and I've manually just inserted the risk to reward ratio of each of the trade. You can see here I'm not going to go through every pair, but you will see that some of the pairs are not profitable. Some of the pairs are profitable. Some of the pairs are around break even for 2018. But the thing is, just because AUD/USD, for example, on 2018 is unprofitable and has a win rate of around 42% for 2018, it got 12 trades and it has a cumulative R of minus 1.3. So in loss around break even. Now, just because AUD/USD is unprofitable in 2018 does not mean it's going to be unprofitable for 2019 and 2020. AUD/NZD has in 2018 a around 86% win rate with 7 trades. Now, AUD/NZD might be unprofitable next year, but then AUD/USD might be profitable. And this is why it's important to do individual pair backtesting and look at the statistics and compare over years to see if there's, for example, a pattern where one pair is unprofitable every year. Then you remove that pair from the system. You want to make sure that you test the correlated pairs as well. So there's a lot of testing in here. This has taken me months. Okay, it took me a lot of time. Took me months to backtest this. But let's look at the actual statistics while we wait for that like number to get up to 100 before I start to show you the actual statistics of the system. Make sure that you do hit the like and subscribe to the channel, because in a couple of minutes I will activate the subscribers only chat, which means that you cannot participate if you're not subscribed to the channel. Okay, all results for all pairs during 2018 is 63 trades. Now this system is traded on the 4-hour time frame for all the Forex pairs, almost all the Forex pairs available at the The5ers, the majors, the minors, and all the crosses between them. It's about 36 to 40 different pairs. So in 2018, there's 63 trades. This is a system that lies between day trading and swing trading. So sometimes you're going to open a position and then it will hit TP within an hour. Sometimes it's going to take even a few days for that trade to hit TP. So you can see not a lot of trades, but the win rate is decent with 63.5 and a cumulative R return of 36.6, which is quite good. I do not have the statistics in this backtesting template for the drawdown. That's very important that you check as well, the max drawdown, so you can actually know how much you should be risking per trade. But this backtesting is based on the only three things, basically: entry trigger, stop loss, and TP. So it's basically checking the win rate of the entry trigger and not the more advanced stuff that comes at a later stage. We can go and look at the results of 2019. In 2019, we have 132 trades, over double the amount of trades. We have a 60% win rate and a cumulative R of 63.5. And we can go to 2020, where we have 90 trades, 52.2, and 26. So 2020 was not was profitable, but not as profitable as the year before. This is now going into the COVID pandemic times. And 2023 has a cumulative R 67 and 60% win rate, and I believe that's the last year of the backtesting. So as you can see here, it does have a positive expectancy, with each of the year being profitable and most of the months being profitable as well. I do not have, this is the older version of the backtesting template, so I do not have all the statistics like difference between buy and sell and all of that, but that is something that you should be looking at to use as well. All right, we're getting closer and closer to that 100 likes. Make sure that we continue to hit that like button, and then we can start diving into the specifics of this system. Wow, I like water almost as much as I like coffee. No, actually, I like water more than coffee, because without water, there would be no coffee. What platforms would you recommend for swing trade? I don't know, man. I don't know. Tough question. I would say that there's this platform called The5ers. I am, though, a little bit maybe biased, because you can see here it says The5ers. But The5ers is a really good platform for scalpers, day traders, and swing traders. Definitely worth checking out. Definitely worth checking out. If you have trading journal on Google Spreadsheets, I do not have a trading journal on Google Spreadsheets, but I do recommend Edgewonk. Edgewonk is a good trading journal. We've had Wolf, the CEO, for Henry's waiting for the money. Okay, well, let me get you some. Let's see. Go to store.the5ers.com. There you go. There you go. That's the merchandise. We got t-shirts, not cool t-shirts like the ones I have, because it's limited edition. Limited edition stuff. You can use Notion. It's free, yes, but you will not get proper statistics using Notion. Yeah, I mean, you can probably get good statistics, but you want to have a journal that is, if you take trading seriously and you really want to, take it to the next level and you want to journal as you should, you need a proper journal. You need a proper journal that is actually tracking all the right statistics in the right way. All right, we are getting closer to that 100 likes. You know what? I'm not going to wait longer. Let's go. Let's take a look at the trade sell. Is a good one as well. I like Edgewonk more though. I think Edgewonk has much more advanced functions. All right, let's go. Let's take a look at the actual system. All right, where's my screen? There it is. Okay, so we got a clean chart here of Euro USD. Now let's explain the system in a very, very easy way. As you guys know, I am a swing trader, but you might have seen I caught like going into lower time frames here from time to time as well. But I have developed a system based on a simple principle. And that simple principle is the idea of a break and retest of horizontal levels in a trending market. Now, I've tested very many different variations of a specific entry trigger by cross-checking different indicators and things like the weekly and the monthly open and different candlestick structures to see if I could improve the entry criteria for the system. And I found that there is a specific combination of entry triggers that works well with the way I'm trading this system. Now, I'm not sure if I have time to go through every little detail of this system, but I will try my best to show you the things that I think is most important. We're going to go to Euro NCD because, as you probably know from these live streams, I talk about Euro NCD like it's the best thing that has happened since, I guess, slice spread, but also the 5ers moving to unlimited time and not having wide spreads. Okay, so Euro NCD, the most beautiful chart in the history of Forex. Time frame I'm using for this is on the 4-hour. And we're looking for a break and retest of a horizontal level. Now, what is a break and retest of a horizontal level? A break and retest of horizontal level is this one right here. That is a break and retest of a horizontal level. Now, I'm not going to go through the whole chart to find the perfect setup, okay? I'm not going to look for the perfect setup because that's going to take too long. I'm going to look at this trade as an example of what we're looking at. Okay, so the first thing that we want to do is we want to identify a resistance. So first, we want to go to the daily. We want to ask, what is the overall trend on the daily? What's the overall trend here on the daily? I would say that we're in range. I guess we're neutral. So when we're neutral, we can go short and long on the 4-hour. So now we go to the 4-hour. We look for a resistance for price to break above, or we look for a support for price to break below. Here we have a resistance level, okay? When price breaks above the level, we wait for a retest of that level. This is the retest of that level. Now, this is the very, very basics of the system where you look for a break and a retest. And on the retest, you want to have preferably a bullish engulfing candle. But I've seen that there's edge in using a bullish pin bar as well. So let's look at the next candle. This is I guess it's not a textbook bullish engulfing candle, but this is good enough. This is definitely good enough for a bullish engulfing candle. When we have an entry trigger like this, now this is not perfect. Perfect would be if we have a move down here and the bullish engulfing candle kind of closing here. but this is good enough for this exercise. When we have a bullish engulfing candle, we want to enter on the close of that candle. We want to have our stop loss below the low that created the entry structure, and we want to have our TP at the last local high. The last local high, or the FTA, is the high that was created on the breakout. So you have a breakout, creates a high, creates the entry trigger, that the high of the breakout becomes TP, the entry trigger is entry, stop loss is below the low that created the entry. Let me know if that's all clear. If that is all clear, we move on to the next step. You know what? I'm going to move on to the next step anyway, but if you do have any questions, please let me know in the comments and I will help break it all down. So this is the basics of the system. Now, what you want to do is you want to add certain indicators to confirm that this is the entry trigger with higher win rate, right? So the first thing I like to add is the Fibonacci retracement. I'm just gonna see if I can just quickly see a better setup. Okay, it's not super clear. Let's go to this one. So what you want to do first is you want to add the Fibonacci retracement tool, and you want to put it from the low of the breakout move to the high of the move. Let's just use that one for simplicity. Now I'm going to go into settings and I will show you the settings that I have of the fib tool. This is very important. Now you can either just pause the video and copy this, but basically what it has is the most important level is the 0.618, the 0.702, and the 0.786, because that is the reload zone, the long reload zone. That's where you want price to create the entry trigger. I've seen through testing that once price hits that area and a horizontal level at the same time, plus the bullish engulfing candle, that adds to the win rate of the system. So ideally, what you want it to look like is something like this. As you can see, if we zoom in, you see price coming into the level, and you have the reload zone right at that level. That is the ideal scenario that you want to see. Now, another thing that you want to be adding is the 20 EMA. Okay, because I've also seen that once a level is hit and that level is confluent with the Fibonacci levels, the reload zone, and it gives you a candle confirmation like a bullish engulfing candle or a pin bar, it increases the likelihood of that being the beginning of a new trend or the dip in a continuation of the trend. So let's add the 20 EMA. Which one is this? That's the 20. As you can see, the 20 EMA actually comes in right in here. And I would actually say that this is good enough, okay? So what I do is you could have a buffer around the 20 EMA, like this, like with a horizontal level or a trend line, right? So this is good enough. The 20 EMA is right here, but you need to add another EMA as well. So you add the 50 EMA. And you want to make sure that the 20 EMA is above the 50. Here you have the 20 EMA being the blue, the gray being the 50. You want to make sure that the 20 EMA is above the 50. Price does not have to hit the 50. The 50 is only there to be below the 20 when going long. So if price hits horizontal level, the reload zone, and on the 20 or slightly below or slightly above the 20, that is confirmation that this is the right level to trade at. We have one more indicator that we want to be adding to this, and I want you to let me know in the comments, because I do know that I have some people here, some previous students and some current students of mine, and I do know that a lot of you in here are trading this system. So let me know if you know which is the next indicator. No, Henry, it's not the it's actually not the ADX. There's you know the another. It's an oscillator. So let me know in the comments if you guys know what that indicator is that I usually have at the bottom. It's an oscillator. It's a bounded oscillator. Yes, it's the stochastics RSI. Henry is absolutely right. So if we add the RSI, the stochastics RSI, now this right here is actually not giving us a entry confirmation, because what you need, and honestly, if I saw this, I would not take the trade. I would not take the trade, because the stochastics RSI is a very important ingredient in this trade. Now, as you will see, this trade setup would have still worked out without the confirmation from the RSI. But when trading this system, it's all about taking the perfect trades. It's all about taking the perfect trades, because I know that what I've back tested is if the stochastics RSI agrees with the system, it has a higher win rate. Yes, without the RSI and the other things confirming, it might still be a good setup, but adding the RSI does add to the profitability and the win rate. Therefore, you should use that. So what is a confirmation in the stochastics RSI? You can go into settings here of the stochastics RSI, and I'm going to put it at, okay, so it's at 70 and 30. The upper band is 70 and the lower band is 30. Remember that the original settings is 80-20, but I have it at 70 and 30. What you need is a pattern like this. You want the stochastics RSI to be below 30 and giving you sort of a rounded bottom, and perhaps also preferably a bull cross. When you get that, you know that the system has everything you want. And this is what that setup looks like. Now, it's very simple, okay? And when price hits the reload zone like this, you might want to have your stop loss right below the reload zone and right below the 50 EMA. I would say the wider stop loss that you can have while still having one-to-one risk to reward ratio, because remember, the overall win rate of the system is closer to 60%, so you're okay with having one-to-one risk to reward and higher. So the wider the stop loss is, the better, as long as you get one-to-one risk to reward at minimum. Now, this is quite easy to follow this system in a systematic way, okay? Because you have very clearly defined entry rules, exit rules, and stop loss rules. And what the thing that I see works best is basically set and forget, unless you have very clear reasons to exit the trade before stop loss or TP getting hit. So maybe if you see something like this, then just exit the trade, okay? Just exit the trade. You want to see clear trend, and if it takes too long to develop that trend, you better take the small profit and run. Okay, let me know if you have any questions on this specific system right here. I have also developed an indicator for myself where I can get signals on this, and I will show you that as well. And I'm not going to share the indicator with you guys. I just want to show you how you can create an indicator based on a systematic approach like this, and then I will show you how you can use an indicator like that. The reason why I don't want to give you the indicator is because it's not profitable in automation. It's only a way for me to look at the charts and manually evaluate if it's a good trade or not. So the way you can do is, okay, I will summarize the 3 indicators at the end. Yes, definitely. Okay, I will do exactly that. The indicators that I'm using is mainly, now there are some more indicators, but I think you don't need to know that. I think this is the basics, and I think this creates a good structure for how to actually develop this into your own style and your own system. So the ones that you want to use is 2 EMAs, the 20 and the 50. You want to use the Fibonacci retracement tool and the stochastics RSI. And in candlestick patterns, you want to look at the pin bar or the engulfing candle. Bullish engulfing and bullish pin bar when going long, bearish pin bar and bearish engulfing when going short. Now, let me actually show you the indicator that I created, and you might understand how, because this is quite simple. And now with ChatGPT and AI, you can just take ChatGPT and just put in the logic in ChatGPT, and it will create an indicator for you. Okay, this indicator that I have was not created with ChatGPT. That was before ChatGPT, but I have of course created other indicators with ChatGPT with minimal coding experience, like minimal, basically nothing, right? But with time and effort, you're able to use AI today to create quite advanced trading indicators. And I am sure that if you take what I've given you today, put it into ChatGPT, ask it to code an indicator for you, and a couple of days back and forth, and you will have an indicator. It's actually quite amazing what you can do today with AI. So let me show you how I did that. Let's just make sure that it's all set up here. Let me show you. I got to show you everything here. And it's a good way also to show the setups on screen. Let me remove the Fibonacci placement. There's no setup here. If you go back, let's say, we go back here. And I'm not sure I have the exact right setup here. Okay, 2050. Okay, good. So this is a good way of finding a couple of trades. Should I use that one? Okay, that one is better. Okay, this one is better because now all the actual signals are showing up here. So I can actually see if any of these signals are actually good signals. And you will obviously see that a lot of these signals are not good signals. Okay, and that's why I don't really want people to have access to this indicator, because then they're going to lose money because they have no idea how to actually use it. But to me, this is a really good market scanning tool. So we can look at this, for example. Here you have a decent setup in a long trend. Okay, so you see here, you got the 20, and then you have the 50, and then you see right here, I don't think, maybe I don't have the stochastics RSI activated, but that doesn't matter. So if we add the fib here from that low to this high, you see that price comes down into the reload zone right here, creates a bullish engulfing candle on that reload zone, inside that reload zone. Stochastics RSI is, I would say it's good enough. It's actually quite good enough right here, because it has it's close to the bottom. It has a bull cross. It has a bullish engulfing candle. It hits a 20 EMA. It's an overall bull trend. And the reason why I have these fib extensions here is because sometimes you can, of course, experiment with some pairs when some pairs are in a strong uptrend. And this is why I don't want to show you all the indicators, because I believe that it's best if you figure this out yourself through back testing. But if you add, for example, the ADX, average directional index, and you look at this one right here. Now, usually what you want to do is, in a trending market, the ADX, you want the ADX to be above 20, and 20 is here. So one thing that you might want to be adding is ADX above 20 and rising when there's a bullish signal? If yes, then maybe you want to look at higher targets. So in this case, as you can see, if you enter on that candle with stops below the reload zone and that wick, it would have easily hit that minus 0.618. And a lot of times the ADX is a good measurement of trend strength. So when you're trading a trend following system, this is a trend following system. And you see that perhaps the ADX is a bit lower, like this trade right here, ADX is below 20. And then, on a trade like this, you want to TP at the last local high, because ADX is showing you that the strength of the trend is not as strong as you might have thought. Okay, It's very simple, guys. It's very simple. Now, if you want to make it even more simple, remove all the indicators. Like this is at the very core of the system. Okay, remove all the indicators. You can even remove the fib, and you only go with the 20 and 50 EMA. Only the 20 and the 50 EMA. And then you trade based on the bounces of the 20 EMA. Let's look at Euro NCD here. You can see that Euro NCD on the 4-hour in an uptrend very rarely closes below the 50. Okay, so whenever you have a bounce on the 20, and then you can trail your stop loss, you can trail your stop loss up with the 50 EMA. So you can see right here, you want to buy when price hits the 20 EMA the first time, and then trail your stop with the 50. You get stopped out here. Bounce on the 20, trail your stops on the 50. You get stopped out all the way up here. And that's actually the end of the trend. So it's also very important to understand when is the beginning of a trend and when is the end of a trend. Well, look at the ADX, okay? Let's only buy when ADX is above 20. This right here is ADX above 20. You see here at the bottom, this line, ADX at 20. Is ADX above 20 here? Yes. So we buy, get stopped out here. Is ADX above 20 here? No. Is ADX above 20 here? Yes. We buy here. We get stopped out here. And ADX is not over 20 throughout this whole period here. Which means we are saved from bad signals within this area. Now, the ADX is actually bullish from here to here. So you would have gotten, well, actually, it's not bouncing on 20. So you wouldn't even have any setups here. And then you look to the downside. So the ADX is a very, very valuable tool to use in your trading, especially as a trend following trader, but also as a range trader, because if you see that there's a price is trading at range highs, and you have a feeling that there's a possible breakout happening, but volume is low, maybe you have a breakout and volume is low, ADX is low, and eventually that will most likely turn into a fake out. So knowing the indicators used in trend following will also help you as a range trader to determine if you have a new range starting or not. Okay, that's a quick crash course on my 4-hour system that I'm trading. It's simple. It's very good to use as a template, and it works really, really well on trending markets. And because of the fact that price action is fractal, this works quite well on all time frames. Now, of course, I do recommend the 4-hour time frame because through testing, that's what I've been getting the best results. Another cool thing with having an indicator like this one that you can easily set up yourself is in settings, I have enabled alerts. So if where did I do that? Okay, so we go to alerts, and I can, so you see right here, I have quite a few alerts. You can search for slingshot, I believe. Yeah, okay, so you see right here, I have lots of alerts on the slingshot indicator, and I'm actually going to re-enable everyone. Restart as per filter. Okay, restart. Yep. Okay, so they are all restarted now. So you can see I have all of these alerts set up for this indicator. So every single signal that yeah, exactly, Alex. This is the system that I was using when I got that. Yeah. So funny story here. So Alex was actually away on a trip. I believe he went to France or whatever. So he was away on a trip, and I started working at the 5ers just when he was away having fun in Europe. And he got back, and then I had taken over his job here on YouTube. And I remember the first call when he called me up and was like, basically like, who are you and why did whatever. Okay. Man, it's good though. Good times. I do miss him. Because now he's just with ABL and like we've had such a good times here, me and Alex together, and now it's just he doesn't have the time for me anymore. He's sitting on his phone watching ABL all the time and watching GBPUSD in the lower time frames, and I'm like, Alex, you gotta pay attention to me. I mean, you know, and it's a sad reality of being a trader. Addicted. When are you going on trip? I think you listened to a word I said, man. Okay, so this is anyway. So you see all the alerts I have up here now. Now I'm not telling you, like, I'm not trying to sell you something. I'm not trying to sell you this indicator. You will never get access to this indicator, okay? But what I'm doing here is I'm telling you that you can create an indicator like this for yourself in ChatGPT. It is simple, and what's really cool is within here I have I can't show you the webhook because that's private, obviously. But in the alerts detail, I have a webhook. That webhook gets sent over to a website called Alertatron, and it picks up a screenshot. Okay, so it picks up a screenshot of the signal, and then you can forward that to your own personal Telegram channel or Discord channel. So I can show you what I'm getting in on my channel. So you don't even have to open TradingView to check the alerts. Okay, this is really cool, and I do recommend that you guys look into this. Try to develop your own indicator because we live in the age of AI. You don't need to code. You don't need to do anything. It's going to ChatGPT, talk to ChatGPT like the human, which I sometimes believe it is, and you create something, right? And I'll show you what this looks like, right? It's actually quite cool. So I get an alert, and then it basically gets forwarded to my phone, and I get a chart, and it looks like this. So on this chart, I can you can see it because it's very white, right? But on this chart, I get a screenshot, and I pull it up, and I say, okay, is this a trade worth taking? Yes. I go down to my office, put in the orders. If no, I go on with my day. And you can do it on phone. So you can be outside, you can do whatever. I remember this summer, right? I was laying on the beach and I was getting alerts. And remember, it's every 4 hours. So you know when the alerts are coming in. It's every 4 hours on the close of the 4 hour candle. So you can take 5 minutes. You can tell your family, right? Okay, I got 5 minutes. I'm going to check the alerts. You go through the alerts. You can even code the indicator to give you in the alert section the entry, the stop loss, and TP, the price, everything, right? So you can just copy paste it into MetaTrader on phone, and you have spent 0 time looking at the charts on MetaTrader, 0 time looking at the charts on TradingView, and you're trading highly systematical. It's really is a game changer when you start looking at trading as a active side income instead of being like actively on the screen all the time. Day trading, scalping, whatever. Try to automate as much as possible in your life and in trading, and you'll be more profitable, and you'll have more time to do other things like working on new strategies or new systems, or because the more time you spend in the chart, the more mistakes you're going to do. That's all it is. Okay, the more screen time, the more mistakes you do. Less screen times, let the trades running. Like, for example, I have this discussion with Alex and Victor. Look at gold. Okay, gold is a good example of this, right? Let me. Wow, what's going on? Why is it up here? I swear it's not supposed to be up here. Okay, anyway. So we can look at gold, okay? Look at gold. So what if you bought the breakouts, okay? what if you just bought the breakout on the daily? So we are now at 1 year ago. What if you bought this breakout and then you trail your stop up with every daily swing high or swing low? Yes, we got swing point here. Let's add an indicator. There's a lot of indicators that can help you with this. What is it? William fractal. Okay, let's go with that one. And then we go in and we modify the fractals, and we put them on 5. Yeah. Okay. Great. So every William fractal. This is a way of looking at swing points, by the way. So every time you get that one, you move it up here, move it up here, here, and then that one, and then you get stopped out here. So stop loss on a daily can be just below the daily candle. It's below the daily candle. It's the breakout level, right? It's below the daily candle, or this one. Okay, and you get stopped out here. Now it's an 8.3 hour trade. I am quite sure that most of you would have been more profitable the whole of 2024 if you just bought this trade. If you just entered gold on that breakout, you would most likely have been more profitable, because remember, 95% of you, or maybe 90% of you, because you're watching this live stream, you're probably ahead of the rest. So let's say 75% of you are not profitable. Okay, 75% of you watching this probably not profitable, and I am certain that if you took this one trade last year, you would have been profitable, more profitable than all the hundreds of trades that you took instead of this one. And why am I saying this? I'm saying this because simplicity is what makes you money in trading. There's a reason why 97% or even 99% of people that try this are unprofitable. And that reason is because they think that in most part of life, the harder you work, the more money you make, which is not true in trading. Absolutely not true in trading. Most likely, people think that hard work in trading means trading more, but the hard work in trading is trying not to trade. It's the discipline and the patience not to trade, and instead take a step back and crunch on numbers. Look at the statistics of your system. Look at how many times have a breakout been retested on gold during the last few years. Yeah, look at the numbers. A breakout trading strategy like this one will most likely blow your mind how profitable it is. Okay, smells like something's burning. I'm going to be right back. All right, I am back. Nothing's burning. Nothing's burning. Probably my brain. Keep thinking about this too long. I mean, it's gold, it's gold. I've been thinking about gold for too long. I've been thinking about this because this applies to me as well. You don't think and Alex, trust me, it's not like, oh, we're professional traders. No, it's like we say things and then what we do is completely different. We're like everyone else. We see gold breaking out and then we're saying, surely this is the top. Surely this is the top. There's no way it's going to continue higher. And then it breaks out and it breaks out and it breaks out and it breaks out and it continues. And I'm left behind and I'm screaming, why? Why is this happening to me? And then I remember it's happening to everyone else as well. But that's just how it is. Absolutely insane. We bought Bitcoin thinking it's gonna, go to the moon. Gold is in another dimension already. It's just insane. S&P 500. Look at the S&P 500. I mean, same thing here. Add the EMAs on here. Okay. Right. Same thing here. Bounce on 20 EMA. We've held this for how long? 100 days. 100 days could have gotten a 10 hour on this one. 100 days. Now, of course, with the swaps and everything, you would have been, would have probably had to sell your house to afford the swaps. Better probably to get an intraday intraday trading strategy on S&P 400. But again, the markets are fractal. Same thing goes for the 1 hour as with the daily. All right, let's see if we can actually find some trades using this. And let me know if there's any lag or anything like that. I'm just going to open up MetaTrader here. Let's see if we can actually find no lag. That's great. That is wonderful. Okay, let's see if we can get if we can actually find any possible trade setups based on what I've just showed you. Yes, Ashley, that's absolutely right. It's vital to focus to know when to focus in the trading detail and when to focus on taking trading forward. Yes, absolutely, absolutely. Very important. And Ashley is coming on the live stream later in the day, later in the sessions. Okay, so let's go to Euro USD. Let's remove the fractals and see if we can find any setups. Well, what do you know? What do you know in the daily? Like this is, and also you see here on, I got the indicator on here, but no signals. And this is just to get the 20 EMA on and all of that. But we also see here we have something called WO. If I zoom in, it's quite small, but right here you see it says WO and MO. That's the weekly open and the monthly open. For the fractals, I set the number that makes sense according to the chart. So you go out, you look at the daily. Visually, it doesn't make sense visually. If you put it on the basic settings, which is 2, does this make sense visually, or are there too many swing points? It does make sense visually, it does, but there's too many. You put it at 5. Now you get just the most important ones, the most important swing points. This is very, very good. Okay, the Williams fractal combined with a trend following system. It's a money making machine. I'm telling you, it's a money making machine. It's just, if you can do that successfully, it's so simple. Like, it's so simple. Doesn't have you don't have to complicate it anymore. Do not have to complicate it. Yeah, absolutely. You're allowed to have an EA and then close whatever trades you have running. Otherwise, that wouldn't make any sense, would it? Like if you have an EA and you're trading an algorithm, and then you see that the algorithm's doing some mistakes, entering too many positions or whatever, then you obviously have to manually correct the mistakes. That's actually one of the keys of trading. Professional. I mean, profitable trading with algorithms is. A lot of people think that it's just about creating an algorithm, creating an EA, and then putting it on the market, and then just let it live trade. It's not about that. It's about knowing when to activate the algo and when to have it not activated. I'm actually in the process of developing an algo portfolio for myself. It's a very advanced process, a very advanced and a very long process. It's not about. I mean, I do have, like you see right here. I do. I'm back testing a few things. Which one is it? Okay, no data. Is it on the 4 hour? Yeah, is it? It's supposed to be on the daily though. Day? Sure why it's not working here. I'm working on developing systems here on euro, like developing. You can see here on the 4 hour, it's I mean, it's quite insane. It's a 19%, 19 profit factor here, but it's easy. Actually, let's look at deep back testing. We're going to back test for quite a few years here. Yeah, so obviously this is not a lot of trades, not very profitable, but still profitable. Now it's quite easy to create. It's easy to create something that is profitable in backtesting. Now this is very important to remember. Even the system that I've showed you, with the spreadsheet that I've showed you, it shows that it's profitable in backtesting. But to create a robust, profitable trading algorithm that you can automatically trade, it has to not only be profitable in backtesting, it also has to be profitable in things like out of sample testing, forward testing, and Monte Carlo testing. So it needs to be back tested on data that is randomly generated to make sure that is actually robust for the future and for different market conditions and all of that. And you can't do that in TradingView. You can't do that manually. You need to have quite advanced backtesting software for that to be possible. And it's not available for everyone. You know, it's quite expensive, and it requires a lot of data power. Like, for example, I have quite a powerful computer. I've generated and tested 900,000 strategies overnight, and none of them went past the robustness checks. So almost 1 million strategies tested, and 0% went to the final robustness test. You can imagine how many millions of strategies you have to test to actually find one that is somewhat profitable on like walk forward data and stuff like that. If you do enjoy what I'm talking about here with algo trading, then let me know if there's something that you want to know more about. It is quite an interesting subject. I wonder how long I'm going to be alone here. Let's look at the today's schedule. If I do have anything joining me, not anything, anyone. That's right. Pedro is supposed to come in a little bit later. Gonna let him know. And then Victor will come in here soon as well. And when Victor and Pedro is here, I will begin working on setting up that new background. Okay, so let's actually go through the market here. Now, the way I scan the markets using an indicator like this one is it's quite simple. Okay, I go to the main list. Yeah, EMA. Okay, so EMA cross works well with everything that is trending. When it's trending, works great. But you have to understand when is it trending, when is it not trending, and a hint would be look at structure plus ADX, and you would understand if it's trending or not. So let's go to my main time frame. Look at that. There's a bull here. Isn't that pretty cool? There's a bull here. That's a bull on my watch list. Okay, so I go through the whole list. Now, this is my scanning process, okay? My scanning process is very simple. Just because I've been trading this system for like 6. Well, you know, I started as a trend following system from trend following trader from day one. So you could say that I've been trading a similar system on and off for 8 years. So I know exactly what I'm looking for. Therefore, I only need to have my hand on the space bar, and I go through the markets one pair at a time by pressing the space bar. And I know exactly what I'm looking for. What am I looking for? I'm looking for this structure. That's the structure I'm looking for. And I'm looking for markets that are here. Now, of course, with the indicator, I don't have to do much manual testing because I get the signals right and I see the screenshot. But I can do this. I can press the space bar and I wait for the indicator to load. And if I don't see anything, I move on to the next one. Euro USD is interesting. So I would normally move this to the green list by pressing Alt plus the Enter key, or is it Control Enter? I don't know. Shift Enter. I can't remember. But there's one key that you press and you add that to the green list. And then I just simply continue like this until this is good. This is good. Euro GBP. I mean, look at this. This is good stuff. Hit that. Yeah, that's good for long, right? So I move that to the next list, and I move on. And we don't need to spend more time than this. That's a break and retest on Euro CHF as well. Move that to the next list. And we only need to spend, 1 to 5 seconds on each chart if we know what we're looking for. That looks like a breakout. Good upside, continuation, had break and retest below. This is just terrible. And then you continue to look at this, right? And here what I'm seeing is potential short on that one. And you want to make sure that you keep it simple, move down the list, quick and easy. This is a possible long here on the breakout, on the retest. Here's another break and retest. So I think most people are spending too much time looking at the chart. We got Pedro in the background. Let me know if I can add you, Pedro. Pedro. Welcome, Pedro. How's it going?
Morning, everyone. I was listening on the backside just to you, and I thought I was kind of on the stream. I forgot about the hours that I had to join.
The worst, man.
I was just getting used to listen to your voice. It was nice.
Well, thank you. Thank you. I like your voice as well, Pedro. Welcome to the live stream. What are we looking at today?
To be honest, I just got my PC back, so I've been assembling it. Now it's the first time I'm basically looking at the charts today.
Okay.
Yeah, I saw that US indices yesterday recovered, had a good recovery at the end of the day to the upside. Now I need to check what's going on in the market.
That's right. I haven't really looked at. I did hear.
You've been talking about strategy, right? Strategy development.
Exactly. I've talked about one of the strategies I'm traded, kind of giving the breaking down the basics of that strategy. But man, I'm looking at Nasdaq here and S&P as well. I would say that looking at the technicals here, it's looking quite bad. It's looking from a structure point of view. I mean, I've always said for the last 6 months or so, I've said that we are this time. The technicals are probably showing us that we're going to look back at this in a couple of months, and we're going to say that this was the start of the recession. I do believe that, and I think we're going to see a deep pullback on the indices this summer. I also believe that if you look at Bitcoin, I believe that the major top on Bitcoin would come around the end of summer, and I believe potentially that the biggest move to the downside on equities and risk on market is going to happen sometime this summer. So we only have 1 or 2 months away from that, and I think what we're seeing in the S&P 500 is. I mean, if anyone looks at this and they say, this looks bullish, like I don't know what market you're looking at, but this to me is a break and read. This is what I would view this as a distribution range, And looking at the history of the S&P 500, we can look at the weekly, for example. Looking at the history of the S&P 500, normally breaking below like the 50 EMA, you'll stay down there for a while if you do. So I think structure is telling us that could very well be the potential start of a bigger bear market on the S&P 500. And I think tomorrow, Trump is going to announce something with tariffs, right? He's going to talk about
the liberation day, kind of.
Yeah, wow, it's crazy. It's using words like Liberation Day. Wow, incredible.
Morning, everyone. Yeah, but I mentioned that yesterday. When you're looking at the daily time frame, the 200 moving average price broke below, and the retracement we had last week, it retested exactly 200 moving average, and it sustained it to the downside. That usually don't look good. Kind of that sounds a little bit more of a bearish. I'm not exactly sure about recession, when it's going to start, whatever. But in terms of a bearish market, I think maybe this is a top for now, and I think we may have that deep retest. In terms of recession, we need the indicators, like we need 2 GDP quarters, negative GDP quarters. So we'll see when that's going to happen. We just last week we got the conclusion of Q4 of last year. It was still positive at 2.4%. So at least we still need at least 2 negative quarters to call it recession, which could happen all the way through the maybe by July or something like that. Maybe get information that you're in the recession. Who knows? But it doesn't look good. The uncertainty, I saw also, I showed yesterday a chart as well with Dirk of the uncertainty levels, and the average, we are closer to levels of COVID in terms of uncertainty in the market. And that leads to scare moves, and you see the move to the downside as well. Nevertheless, we are going to have moves up, moves down. Yesterday, for example, there was an aggressive move to the upside. The market was almost down 1.5%. It closed up like 3 or 4, almost 0.5%. So there was a full correction. So there's going to be opportunities for day traders. There's going to be opportunity. There's going to be plenty of volatility. But it's important to also be aware of potentially the direction that we are headed, especially if you want to keep trades open for longer, or if you are swing trading. That's something to be aware of.
Pedro says that if recession comes in, how long can it last? So recessions usually don't last very long. They do recover quite quickly. So okay, so you're gonna see a lot of things popping up on the screen here, because it's I've tried to map out the credit cycles. I'm gonna remove some things here. I've tried to map out the credit cycles of previous credit cycles. Okay, so that is okay. So these are the credit cycle, like the bigger phases. Now, wow, it's actually okay. So this is not. I haven't pulled up the screen since beginning of the year, and look at how nicely it fits in with this contraction starting in this is on the weekly chart, but contraction starting in December last year. We got the top right here. We got the top in February. We are now in the contraction phase, I believe, and actually stabilization might actually come, in August. So the top on Bitcoin would be where the stabilization is. So we can go back to previous time when we had, this was the contraction, this was COVID, but this is not really correct, because COVID kind of created a lot of problems for the, but here you see in 2008, the financial crisis, you have contraction lasting for 530 days, and then stabilization here, and then it creates that recovery phase, and then expansion. But it can last for over a year. But as you see in this COVID, I would not put a lot of this here though, but this contraction phase, I'm looking at like under a year, and we've already been in what I believe is the contraction phase for a couple of months. So sometime at the end of the summer, I believe, would be the end of the of that recovery. Because the thing is, when you have, if for example we have a recession and we see that we do have 2 consecutive negative GDP growth numbers, that would be like the official what's the word? The official recession. Yeah, so when we have the official recession, I believe not long after that we're gonna have the stabilization phase, because when it's obvious, it's usually time to find the bottom and create stability. It's about entering early in a recession where you make the money, because when everyone knows it's a recession, it has already dropped quite far down. So yeah, I think we are at the end of the, or I guess in the middle of the credit cycle, because the credit cycle would actually end at the end of 2017, but a new credit cycle begins in stabilization. So they overlap each other most likely. And so this would be, the stabilization phase would obviously be when interest rates go down significantly, when we enter like, low interest rate environments again. That happens in stabilization, because the credit cycle is all about the availability of money. Like, for example, in my neighborhood, so I talked with the bank a couple of months ago about a loan, and it was very, very difficult to get a loan. And in my neighborhood, it's there's a lot of trouble selling houses. We go back a couple of years, the houses sold instantly at probably 25% higher than what they're doing now. And now no one's interested in buying a house. It's very difficult to get a loan. That means that the availability of money is tightening, and that is usually what happens at the contraction phase at the top of a credit cycle. And I do feel like most of you in here, you probably feel that everything's getting more expensive. We're not getting as much as we used to from our salaries. It's difficult to get more things and more money, basically. And I believe we're at the peak of that. And I believe that what Donald Trump is doing in the US now with the tariffs are only speeding up the recession in the US, and that will obviously spill over to the rest of the world. And then when all that is done, we can go into a low interest rate environment again at the end of the year. Now, that's my prediction, but it's been holding up true so far. Like, if we go back and look at the S&P 400 chart that I have here, I remember when I talked with Dirk back in 2022. We talked about how we would this would be the end of the bear market, and it was the end of the bear market. So combining the credit cycle with market structure analysis, you can get fairly good estimates of what is happening in the macro as well, without really having a very big understanding of the macro, if that makes sense. Okay,
Yeah,
that's what I think.
Yeah, that's a good look at it. It's hard. Like, the timings are always hard. It's nice to see your predictions and what you have in there, but the timings are always the hardest things. But as technical analysis we are and traders, we are able to identify the patterns. Right, and the patterns, they tend to repeat themselves in terms of potential breaking of structure, whatever it may be. They do tend to repeat themselves. So it's kind of possible for us to spot them as they are happening. Many people, as I mentioned, when you start eventually talking about recession, it's going to be our price maybe already dropped like 15% or maybe 20%. Meanwhile, we already missed quite a lot of the move, and that's maybe now where the majority of people are going to start thinking about, oh, I need maybe to sell. But that's maybe the moment where we're finally going to have a bounce in the market after price dropping 20%. And that's why the majority of people usually wait, or when eventually it get into the news, the main news. It's usually right, and that's why then you can actually see a bounce, or when it's kind of prices at all-time maximums, and everyone is trying to jump, and that's when basically the big money is maybe starting to close some of their positions. So timing is important. It's one of the hardest things, but for us, in terms of identifying patterns, I think it's possible to see. And then it's trying to see as well what is actually the market paying attention to. For example, yes, in 2022, it was mostly about interest rate. It was about inflation. It was about interest rate, to see when the Fed eventually would stop hiking, and when the inflation would finally start showing signs of stopping to increase and eventually slowing down. So that was a key point. It was visible on the 13th of October in 2022 when exactly that happens. was around the CPI data that in the end of 2022 cycle start to increase. Now, there are cycles that can last more than others. Recently, it has been quite quick. In 2022, it was like 8-10 months. If you go back to the 70s, it took a long time before we actually create a new all-time high. So that could be a problem. We can have a little bit of a positive move, but it can last. It can last a little bit of time until we get actually new all-time highs. Who knows? Even in the 20s, like if you look at 20s and then 2008, there was a cycle. Basically, in 2000 and 2008. Basically, 2008 was kind of a double top created and price drop. There was almost a no break of an all-time high. Price created actually still a new low before eventually 2009, 2010, you finally broke new all-time highs. So who knows what's going to happen in there? That's more of a, if you are more investing long term, like should we kind of get into cash? Should we close some positions? Should we start accumulating? Like that's more of a bigger macro kind of investor mindset. For us traders, that's completely different.
Yeah, for me, by the way, guys, make sure you go to the comment section and you follow Pedro. This is his YouTube channel. He's also the manager of the Portuguese-speaking community here at The5ers. You can find a link in the description, but make sure that you follow his private YouTube channel as well. A lot of really good content on there. Speaking of averaging out, going to cash, my long-term savings, like I have a long-term savings in different mutual funds and stocks and things like that. I've sold most of that, averaged out of those positions, sold most of that, and I'm now sitting fully in, well, not fully, but almost everything in cash, waiting for that stability phase in the credit cycle to go back in. Hopefully I'm right, and the S&P 500 just doesn't shoot up. But if it if it reclaims this area, then I'm going to get in most likely.
There's a comment here about who's why. I have a serious question, please. When I was trading only gold since 2024, I was serious doing well using a trend line. 2025, I wanted to try something new, and I was trading different currency pairs, and I started losing back to back. I lost 9,000. Okay.
Yeah. Why not use trend lines? Why not go back to what you did in 2024? You made money. You were doing well with whatever you were doing in 2024. Why
the problem is that he selected, or he started trading different currencies. He swapped from gold, which was it's in a perfect asset at this point in terms of looking for moving averages, because gold is just moving upwards. I think I even mentioned that the other day. Like if someone has a strategy that is just trading gold right now and he thinks that's a robust strategy for other type of environments, you're going to be find out in the future. But for now, it's working. It was like buying stocks back in 2021. Everything was going up. Like after COVID, basically everything was going up. You just need to close your eyes, buy any bounce back, and you are in profit. As soon as the price shifts and the market changes, then it's a different story. But gold is still working. Like I don't know why you just stop doing what you're doing on gold.
Yeah, continue what you're doing. And I think the major problem here. So basically, what you're saying is you started trading different currencies, and when you started trading different currencies, you started losing money. Now that tells me that you have you didn't backtest that. You need to backtest, because if you backtested whatever you're doing and then maybe used forward test or demo trade for just a couple of weeks, instead of losing real money, you would have seen that it would not have been profitable.
Yeah.
So you can never start trading a new system without knowing if that new system is profitable. That you can't do that. This is, it's like, so when you're trading, you're running your own business. So imagine that you're Tim Cook, you're running Apple, right? And all of a sudden Apple's doing like, yeah, you know what, we're doing pretty good with iPhones, but let's start building airplanes. And they start building airplanes and they all start crashing and lose money. And they're like, what did I do wrong? Well, you stopped selling iPhones. You should probably go back and trade gold with the trend lines. Do not start building, systems on other pairs that you do not even know is working. Okay. So I think that's what you have to do. You have to figure out like what are you doing? Maybe you're a gold trader. Okay, maybe you're just a gold trader. Maybe you're not a Forex trader. Maybe you're just a gold trader. Stick with gold if that's what makes you money. But also then of course we You know, Pedro, you said something important. We look at gold. Why is gold profitable in 2014? Okay, 2014.
Yeah.
This is 2014. Why is gold profitable in 2014? Well, maybe because of this insane uptrend right here. This is 2014. Yeah, gold. You're profitable trading gold because it's trending like this. So what's the solution? Look for trending markets. One advice I have is to look at Euro NCD. Go to Euro NCD and you zoom out and you try to figure out when Euro NCD is trending. Because when Euro NCD is trending, it gives very, very clear trends. And maybe you need to find an asset that is actually trending. Remember the JPY pairs when we had the trends on the JPY pairs. I remember back in like in 2019. Yeah, I even have the channel still here. Like from 2020, this was on a daily. From the summer of 2017 when I started trading to all the way to 2020, AUD JPY was in the most beautiful downtrend. A beautiful downtrend. AUD JPY with a trend following system was easy back then. But then you look at where AUD JPY is now. You know, it's just in this trend and the range. It's not easy to trade AUD JPY with a trend following system. So different pairs, they enter and they have different cycles. So you have to understand what cycle are you profitable in. And most likely it sounds like you are profitable trending trend lines in a trending market. Now, let's give you a little hint on how you can identify trending markets. You can add the okay, what this is on balance volume, isn't it? Let's take a look. What is this? How can I? Okay, so this is OBV. That's on balance volume. Then we can add the ADX as well. Now, the best if you can get futures data on this, but it works as well. So the OBV, once you want to see the OBV rising in an uptrend and falling in a downtrend. If it's falling in a downtrend, it's confirming the trend. You want the okay, so that's the ADX. I got the ADX at the top as well. Okay, so you want the, you know what you can do? You can go into the ADX. You can press right here and you can add indicator on the ADX. We're going to go to EMA and we're, okay, so all right, there it is. So we're going to be adding EMA on the ADX. We're going to be adding the 20 just to have like confirmation. Now the ADX works the same to the upside and to the downside. So if it's rising, the downtrend or the uptrend is strong. So you want to add a level at 20, but then of course you want to make sure that you adjust this to whatever pair that you're trading. So for example, you see the OBV starts falling here. You have the OBV is starting to fall here. And at that time, right before here, you have the ADX trading above 20. Okay, so when the ADX starts falling in a downtrend and ADX is above 20, you want to short AUD JPY. The OBV continues to fall. Okay, it just continues to fall throughout this whole range. And whenever the ADX is above 20, it means that it's a strong trending market. So you have certain scenarios where it could have traded AUD JPY in this downtrend, which is here. And then I'm going to select this one as well to here and here. These are your windows when you should be trading as a trend following trader. And as you can see, there's quite a few windows here where you could have made some good money on some really strong trends on AD JPY. Now you can look at gold as well from this perspective. What do we have on gold? Okay, so this is on the daily. We can add a level at 20. So again, you have, see, we got We got equal highs. Get equal highs on OBV right here, and we have lower highs on price, which means there is strength in there's strength behind this move in terms of volume. You have equal highs here, but you have a breakout on gold. So gold is breaking into new highs on the OBV, but it's creating double tops on price, which means there's a positive divergence here. And gold, once above the 20 EMA, and for gold, you can probably put it much lower. In a trending environment, you can put it even at 15. Especially for gold. So we got ADX at 15. So whenever ADX for gold is above 15, or you can do it very simple. This is why I added an EMA. Whenever ADX crosses above the 20 EMA, right here, that's a buy signal. Do you have positive divergence on OBV? Yes, you have. You have OBV breaking out, but you have double tops on price. OBV here on that breakout is confirming price. So that is a breakout that is confirmed with ADX and the OBV. So one thing with volume is that volume confirms whatever price is doing. If price is in an uptrend with declining volume, then it's not confirming price. But volume going up and price going up, they confirm each other, and that's the ones you want to be trading. So having these two tools, OBV or some else unbound volume indicator with the ADX and looking at the structure, then you know what are the markets that you should be trading as a trend following trader. And that is the answer to this question.
All your problems.
Yeah, no, well, to this question right here, I really hope you're still in the live stream and it didn't just ask this question and then disappear, because this is very advanced. This is quite advanced technical analysis, but keeping it simple. Understanding when a market is in the environment for you to trade is, half the battle as a trader. So really try to try this out, and you're going to see some good results, I'm sure. All right. Hello. Victor.
Hi. I didn't say hi, but I was it was too good of a moment not to say what I said. Hi everyone. I'm back. How is what are you guys talking about? Gold, I see you're doing some high level technical analysis, indicator stuff, divergence. It's breaking all-time high gold again. So I'm not surprised you're talking about gold. Gold has been a raging bull for so long. I mean, how long can this continue?
Yeah, it's
That's a good question.
Yeah, like I sent in a group a couple of days ago. I mean, should have just bought gold, like on the breakout, the beginning of 2024. That was one of the cleanest breakout I've ever seen. It can add a horizontal level here, and I mean, it's a multi-year breakout, and with volume confirming, ADX confirming, and it's like, yeah, let's wait for a retest, If I knew what I know today back then, because I've learned this year, I've learned so much about technical analysis and confirmation using volume and other indicators. I would have bought that. I would have bought that absolutely 100%. This is one of the most obvious breakout trades that I've ever seen. Like, it's just incredible how should have bought that.
Yes, that happens a lot, right? We see things in the past a bit more clearer because we have more knowledge, more experience, because we're actually paying attention at the right. Well, actually, you don't have to pay attention at the right moment because it's already happened. You can identify and pinpoint it. But it's so true. It's so true, and I think it's a hope-giving exercise. Although it may not help you anymore, Jonatan, and anyone else and everyone else listening in or watching, when you after the fact conclude or realize that you, given the tools you have, given the knowledge and experience you have, you would have been in the trade. It doesn't help your wallet anymore because the trade has already gone. But it
Well, thank
does.
you, Victor, for pointing that out.
I know, but it, but it does give you hope in the sense that you are able to identify them. You didn't this time in time, but your tools and your knowledge and whatever you're applying is able to identify these opportunities. While I was developing my system, I saw that, and that made me very you know excited because finally I had a way to not predict but identify those opportunities, and not all of them, but more often than before. And that's a very encouraging sign, I think, when you're, even if you didn't profit from it, you were able to, you were supposed to be able to catch that trade.
Yeah, I have. I want to comment on this. So this is a good comment, but you have to understand there's a difference between analysis and trading. I would view myself as a very good technical analyst, but a above average trader. Not a expert trader, but definitely more of an expert technical analyst. Now that's because analyzing the markets and trading the markets are two completely different things. And also the evaluation account that I'm trading with a untested system, not back tested, not forward tested, not even manually tested, simply trading discretionary based on what I know, which is not the way you should be doing it for long-term success. However, the system that I just showed you in the beginning of the live stream, that is the system that that's a system that is at the core of what I'm doing in swing trading and on my bigger funded accounts. It's trading discretionary on it's playing around. It's basically trying to push the limit of what I can do in discretionary trading. But it's important to be honest on that. If there's a difference between analysis and trading, it's very important to understand that difference.
It's a big difference.
Yeah, I have to. I'm gonna take a break. I'm gonna drill some holes here and put some things up, and I will be back. Later.
Right.
When you say drill some holes there, I'm sure you're pointing to some kind of wall, right? What we see is just pitch black, black hole kind of black.
Yeah, it is.
There
really,
is a wall
really
behind
black.
you, right?
But if I pull on the, if I do this, oh, that's really bright. Look at me. Holy shit! But you don't even see the wall now either. Oh, it's
yes,
very dark.
It's slightly. Yeah, it's a little bit
very dark. Wow, those lights are insanely bright. I have them on 5%. Okay, whatever. I'll be back later.
All right.
All right. Take care.
So yes, we will continue with my pink background. Let's see, what are we doing today? Pedro, thank you for covering up you and Mike yesterday. I'll be forever grateful for your efforts. You guys took one for the team. Thank you for that. You guys are good fellow co-host as always. How have you been doing today, Pedro?
To be honest, it's just updating a little bit, looking at market. Didn't really look at much this morning, and adjusting. I think mainly trying to see where the good opportunities are now after last week's move. Today's was yesterday recovery in US indices. FX continues to be in a range, mainly dollar index, gold, euro, and pound. Hi, Dirk. Welcome.
Hello, boys. I just heard something about drilling some holes, so I thought I might join it.
You're more than welcome. Come in and drill all you want.
Drilling some holes in gold, hopefully.
So, how have you been doing, Dirk?
Yeah, pretty good. Pretty good. Yesterday was a very good day. So the trade I did with Pablo in the early session turned out to be quite profitable one. I'm looking for new entries, preferably in long gold positions. But right now, as of today, you know, at this time, the market doesn't really give me any chances to find good entries there. What have
Okay.
you guys been up to today?
I've just started, so we are getting. I haven't started doing any analysis yet on gold and any other pair, but I have been watching EU and GU as I usually do.
Of
So
course.
yes. I haven't had any signals today yet, but I'll take the audience in a short while on that adventure as well. Looking for exploring. It's the scavenger hunt. Where's the opportunity today? So Dirk, what do you think about gold in terms of coming days? Are we near a top, or it's just us the beginning?
I don't think so. I maybe Pablo remembers. I was talking about this yesterday. I actually did an analysis on of all the data, daily data on gold going back to the 1980s, like how likely it is to see a bearish candle after 1, 2, 3, 4, or 5 green candles, daily candles, that is, in a row. And actually, there's no edge. Like when you look at 5 green candles in a row, the likelihood of a red candle to follow is somewhere at 53%, which I think for a daily trading system, this is not enough edge really to find something. Same with when gold is touching its average true range on a daily level. Like the likelihood of bouncing off there is only between 13 and 24%, which surprised me very much. And so I think gold is going to continue as long as we hey, you already drilled all the holes.
I have a great. I actually wanted to add on that. I've done the same test on EUR/USD.
Oh.
When the ATR is hit on EUR/USD, there seems to be more edge trading with the direction of the retest. So if the one time ATR is hit, if you try a long setup, it seems to because there's momentum, right? So the ATR is hit, and then there's momentum, and you're basically trading with the momentum. Now
that's the thing. Once you have a trend, it's just continuing.
Yeah, exactly. I'm setting up. Look at this. I'm setting up a little light. So whenever there's a TP being hit, check it out. Oh no,
we're not seeing anything.
It's not lighting up because you never hit a TP or what?
Yeah, exactly.
Like this. It's gonna light up like this.
Sorry, man.
You see it? Right here.
Oh, nice.
That's my TP light.
What does it do when it hits stop loss?
Well, nothing obviously, because it never hit stop loss.
Oh, that's all.
Where would you put it, Jonatan? Where would you put it?
On my head.
That would we actually should do a stream like this where we all have a light like this on our head, and every time we hit our take profit, it's like wee.
Oh, and I got glue all over my hand. Okay,
you guys are funny today, more than usual funny.
More than usual funny. But coming back to what you just asked about gold, and sorry, Pablo, if I bore you again with this, because I talked about this, I think, quite extensively yesterday also. I think gold is like doing what it's supposed to do at the moment when we look at the historical context. Gold always used to be the hedge against uncertainty. And we live in times now where we have a lot of uncertainty, mainly because of one gentleman named Donald Trump and his thumb tweeting, all the things that are on his mind, whether he should or not sometimes. And in the past, like 15 to 20 years, gold was never like reacting really like it's historically meant to be, like a hedge against uncertainty. Back then in the days when I started trading, whenever you had a risk-off sentiment, people would flock into gold, buy gold, because that was like the only, if everything fails, at least you have gold. And this kind of broke down, maybe also a little bit with the rise of Bitcoin, I don't know. just a hypothesis. And so gold would actually go down when the stock markets went down, which was really odd. And now, ever since especially Donald Trump has been elected since November, gold has kind of returned to its more historic correlation to risk-off markets. And that in a sentiment where we saw also the US dollar going quite strong. So that is like something actually that should have brought the gold price down, a strong US dollar. But contrary, despite the strong US dollar, until lately, of course, we've seen a little bit of a weaker US dollar. We've seen rising gold prices. And at the moment, I don't see why this should stop. This will stop eventually, but it will only stop when the markets return to more certainty, which would mean like Donald Trump becoming a little bit more predictable in his behavior, which probably is not going to happen for the next 4 years.
Yeah, either that or when the Fed eventually, or when the Fed eventually starts giving a hint that it's going to actually cut rates, and
absolutely,
going to be happy about it.
Yeah.
Do you have a graph on the predictability of Trump in its previous term?
I do not. Do you have a graph on that?
No, I don't.
Oh, I thought maybe because you asked like this.
because if you did, then we could know, as traders as we are, think, okay, in the second half of his term, he typically becomes more predictable, and this coupling or decoupling of the usual safe haven behavior in gold will return to normal, things like that, right? We could, if we had some kind of a graph, basically.
Yeah, but I mean, my educated guess on that would be that in the last 2 years, or especially in the last year or prior to the next election, he probably is going to be more moderate in his tones, because he wants to be reelected. But actually, he cannot be reelected, right? But I mean, he's already talking about, who cares about the Constitution? Let's have a third term. The Constitution is not meant for me, but for everybody else in America. And so that could be something. But I don't know. It's really hard to predict. The markets are doing something I predicted actually to happen in late Q3 of 2025 or early Q4 of 2025. I told Pablo also yesterday, this presidential market pattern usually always showed like that, that you have 1 year of really good performing stock markets after a US presidential election. Now we have something completely new. We have also a deviation between the growth of the M2 money supply, so the cash available out there really to buy things, to buy assets, that is, which has been rising to record heights. Normally you see also risk on assets rising parallel to this then. So I don't know where it's all going to be. And it's for sure interesting, but it's extremely hard, in my opinion, as especially if you are trying to scalp the markets, if you're trying to day trade the markets, to kind of navigate at least the notion, there always could be Donald Trump or somebody else for that matter coming in, tweeting something, saying something that's heavily going to influence the markets and maybe makes everything I did in terms of technical analysis 5 minutes ago obsolete.
You mentioned something about it seems to you that the Constitution, according to him, that the Constitution doesn't apply to him, right? That's what you just mentioned, right? It applies to everyone except him. In his own words, I believe, if it's not, I believe he tweeted this, or yes, he tweeted this, if I'm not mistaken. He said, if something is in the interest of the country, it is not unconstitutional.
Yeah, sounds like what the average dictator would say. No, I mean,
if he is, his third term is in the interest of the country, then it's okay. It's okay. The Constitution can be put aside, and he can have a third term because it is in the interest of the country, according to him.
Yeah,
I mean that's at least that's what I think he's alluding to.
Yeah, of course he's alluding to that, and but that's the danger. We're talking about the separation of the borders between the executive, what is the English term for them? The law-giving institutions.
Legislative.
Thank you, legislation, and what's the third one? I don't know the English term for that. I'm sorry, guys. So that the power of those three are basically separated, and this becomes mingled. I think he is also the first president like doing everything by presidential decree, basically overrunning the Congress by that, at least short term. And yeah, but I mean, by the end of the day, our job as traders always is we need to adapt to what the market is doing right now. So we are going to adapt to this. It's difficult because it's a situation unlike anything we've seen, or at least I have seen in the past 25 years for the major markets out there. But we need to adapt to that, and we will adapt to that. That's the by the end of the day, don't get me wrong, also kind of a nice thing about being a trader on the financial markets, that you're never able to really rest and be comfy in what you're doing, because all the variables are constantly changing, and you need to adapt to your strategy. And be it just adapting with your risk management. Like me, I'm trading quite small positions risk-wise at the moment. Not in the evaluation gold account. I'm risking more now, of course, because eventually I want to get to the next stage there. But on my main account, on my option trading account, on my cryptocurrency trading account, investing account, I'm trading rather small positions because I need to account for this uncertainty that somebody could send something, Donald Trump could say something that's going to screw up my analysis, and that's going to cause a lot of volatility.
Yes, indeed. It's a blessing. It's also a curse, right? The ever-changing environment we have to operate in. Of course, we're not the only profession. This is not the only profession that is the case. Many of other professions have this as well, but not everyone, right? So we have, not all the time, but anything can change, anything can happen in the market on the geopolitical arena, and it changes everything. Your technical analysis can be thrown out the window. It's no longer is valid or effective. So that's a blessing and I say blessing and a curse. I say blessing because it also gives us opportunity, because more people can be trapped thinking one way, and if you're quicker to realize that it's a trap, then you can benefit from it.
Yeah, absolutely.
Awesome.
Absolutely. So what are you guys looking at the moment? I need some ideas. I'm getting crushed by Bitcoin today. I'm not getting any entries into gold. I need something to trade today.
Sure. Well, what I have is the following. We have on both sides with GU, we have some opportunities, I think. One is, it's very plainly said, from this area, we have a very simply said, from this demand area, we could be looking for buys, and I'll break it down more in more details. And from the whole structure, where this is the left shoulder, the head, and the break for the neckline, we could look for sellers or sell opportunities, and initially target this, but eventually leave if you get, at least if you trade the way I do, which is with higher time frame confirmation, I would leave some position open for a longer, a partial open for a runner. But that's basically, and I'll tell you guys why I think it's so clearly a double opportunity here. Let's go to the analysis in on the higher time frames to understand where we are and why I said or say what I just said. Based on the monthly time frame, we do have a quasi at play, where this is the left shoulder, the head, the break of the neckline.
Is it me or?
No, I think it's Victor. Yeah, turning into a robot.
Break is not relevant.
Yeah, I think a bit of bad connection from your side.
Is it me?
At the moment? Yeah, you were breaking up.
It is. Hold on.
So maybe
I will
you
have to-
want to reply like the last maybe 15 to
Um,
20 seconds you were talking about. I think it's because
it's
Victor
frozen.
really is a trading robot.
It-
in
it was
reality,
about-
it's like an
to-
AI, and in reality, he's like a robot trading.
Yeah.
That's why he's so damn good at it.
Maybe you guys can take over for a few minutes while I fix this, because I know what it is already. At least let me check.
Well, we can hear you just fine again. So
Yes, I
Mhm.
know it's just fine, but I'm thinking I didn't fix it yet, so I'm thinking, do I need to do something? Let me check. All right, so I'm gonna continue, although I can spot it. Okay, all right, let's continue. It's supposed to be okay. All right, so as I was saying, looking at the higher time frame from the top-down analysis, we do have a reversal structure at hand on the monthly time frame. Yes, the highest time frame most traders look at, and the only relevant structure is above us. We're not there yet, so the monthly time frame isn't going to tell us anything, at least not today, not this month, and maybe, who knows, maybe not for a couple of a few months. Let's go to the weekly. The weekly, we see the same reversal pattern, and the reversal pattern is, I'm gonna point it out very quickly. That's the neckline that makes this the left shoulder, this the head, the break of the neckline, and it comes back to one of these two structures. One is, of course, the where we are currently, and that makes it GU. That's why I'm starting with this. It makes it very interesting, because we are we have a weekly quasi at play. It hasn't signaled yet, but we are in a very interesting area. One of the two areas where, if it is going to reverse, it is likely to reverse from these areas, the place where we are currently, and the one which is within the monthly time frame. If we actually have price doesn't respect the current weekly entry order block we are in, and it goes to the next one, you already see where I'm going with this. We would have the monthly as well joining us, which we don't have currently. Having a monthly quasi is something we really have to pay attention to, because even a weekly is already a huge opportunity. But okay, so
Mhm.
we are in a entry order block on the weekly time frame. The question is when, right? We don't use, it's not a signal yet until the weekly actually tells us. It needs to tell us, but with price, that the sellers are taking control. That hasn't happened yet. So we'll have to wait for that signal. But in the meantime, what we do have, while we're waiting for that signal, what we do have is on the daily time frame. If we go deeper, let's zoom in. We see that we have already a quasi at play, right? We have an established uptrend, breaking of the neckline, that break of structure, and it's coming back on the daily on two order blocks, which are, if it is going to reverse, it's likely to be doing it while interacting or after interacting with one of these order blocks. That's the daily up here, which is at top, which is the last order block, and the one we're currently in. Now, what I want to say is that this is the sell opportunity that I'm looking for, right? Looking at least going to the low of this low, and if we get this week, and that's why I wanted to show you guys. Look at this number. This would be 2869. If we go to the weekly, if we get a close anywhere close to that level this week, what would that candlestick combination look like? Anyone in the chat? We have someone spamming the chat. AK25 Forex Trader. If you do that again, I will have to time you out, or perhaps even ban you, just so you know. It's nothing personal. Just keep
I
it.
mean, I could be mistaken,
Yeah.
but I think he was asking for gold analysis. But no, seriously, don't spam, please.
I'm sure he's very excited for gold, but one time is enough. And after a couple of minutes, you might remind us if we didn't notice your message. But if you do this spamming, you will win a very nice prize, which would be outside of this room. The nothing personal, just keeping the chat tidy up. Right. So what I was saying was, if we look at the daily, right, we have a reversal pattern at play, right? That's a reversal pattern, and possibly a move to the downside based on that reversal pattern, based on that quasi. And we are on Tuesday, so we have a couple of more days coming up for the end of the week. What happens if the target of that setup happens to be hit by the end of this week? What kind of price action candlestick combination would we see? All right, I'm gonna end of everything. If we get a price by the end of this week here, you can already see it. Perhaps we're gonna be, and the open of the previous candle is at 98, and that possible close, if it happens, it's hypothetical. I don't know where it's going to happen, but if it does happen, and it's below that, we're automatically be forming a bearish engulfing. Hasn't happened yet, but if we have a reason to be in the trade already before it actually signals on the weekly, then you got yourself your higher time frame confirming of a possible continuation to the downside. So that's what I mean by getting into the trade with the highest alignment possible, but looking to upgrade that trade for a higher time frame. It hasn't happened, and it might not happen. So it's conditional. We'll have to wait for that. But I like these setups, because you get in the trade with a valid reason, right? But the bigger signal comes after you and supports you for holding that for much, much longer. And if we get a weekly signal, we don't have anything below us than the structure all the way retracing the whole movement we had. You can understand that this is of course a huge opportunity. So that's on the daily time frame. Actually, it's on the weekly time frame. Impossible scenario on the weekly, and on the daily, what we see is we have a quasi, which is the one that I just pointed out for you guys. That's the established downtrend, breaking of the structure, and if it goes back, we can identify one structure, one of the two structures, but one of the two where price is likely to use in its way going lower. If that's going to happen, right? Actually, you could see it already happening, because yesterday it closed as a bearish outside bar, right? That's a strong sign of sellers taking control. Where did they do it? After they interacted with one of those two order blocks without invalidating them, right? So the market is following that script of this reversal pattern. It doesn't mean it's 100%, but if the market is responding, telling you, following the cue, following the script of a sell opportunity, we better listen. So that is we have a daily quasi, which has been by the price action we had yesterday, right? That outside bar, that could be a very valid confirmation of a sell signal. So that's one. So we have a daily sell signal here. We go to the H4 and look for entry order blocks, right? Yesterday, before the market closed, you could have been looking already for that possible. The same way I'm doing right now with the weekly, you could have preemptively be entering on a lower time frame, let's say on the 4-hour, and just wait, holding that position to maybe the end of the day and see, is it likely to close as an outside bar? And if it does, then you got your confirmation to hold it even longer. So, but we don't have based on we did have a H4 a signal yesterday, which was this one, looking at a lower time frame. This is the quasi. Let me see where it is. Yes, this is the quasi. I'm going to show you guys. That's the head. This is on a different time frame, right? So each time frame has its own structure, which may or may not be the same. So this is the established uptrend based on the head, making the left shoulder this peak right here, right? And also that means that the neckline is not around; it's exactly at this place, right? This is the neckline on the H4, and making the H4 order block. This one, the entry order block, right? So we're not looking at the daily as we just currently looking at the daily as we just did. We're only looking for this H4, meaning when price comes back to this H4 structure right here, that's when we look for a sell signal. And look at this. Look at what it does. What is that? Can anyone in the chat let us know? And while you're typing in the chat, hit the like button, subscribe to our channel, because it will help us help you in the future. So I'm checking the chat. There is a delay of about 10 seconds before you. A hammer candle. Raza says. Someone says an order block. Yes. Any more specific? Can anyone be more specific? Order block is correct. A hammer candle is absolutely correct as well. But I'm looking for something else. Someone in the chat tell me what is it? It's my favorite kind of order block. Yes, it's a riddle. Yes, we have we're gravitating towards a riddle driven trading stream. Market rejection. That is absolutely correct. What I'm looking for is it is an outside bar, right? So it is an order block. It is a hammer candle. Yes, and it's there. All of those those answers are correct. But if we zoom in, right, it did test and did interact with that order block for a very long time, right? These are H4 order block, H4, and in all of these, it hasn't invalidated, right? While it hasn't invalidated that structure and interacted with it for quite some time, at the end, right, when we last expect, because it was coming with a lot of force trying to break it. See that outside bar bullish, right? And that outside bar, when it hit that the entry order block on the H4, what does it do? It forms the opposite, negating the first bullish outside bar, the previous one, and that is, by this close, that created the outside bar on the H4, which has a potential daily signal. That was yesterday. So that was that is very interesting, because now what we are having the time frame aligning up. H4 signal yesterday. Today we have, well, actually at the end of the day yesterday we had a daily signal as well. So we can still participate in this reversal, in this possible reversal, which is looking for, in my case, that would be looking for structures of bearish structures where price would come back to and retest on its way going lower, right? This is the target, the initial target of that structure. It's on the H4. So let's line it up. That's the target, the initial target. However, I need to pinpoint something though before we that's the just looking at the sell side. This is and we do have an order block here, although it's already made quite some movement. If price is going to continue to that target, it makes a lot of sense for price to use this as, and it has already, right? Hasn't it? Look at this pin bar. It has already been rejecting basically this structure. So if we are able, this is the area. If we go to lower time frames, I didn't get as much of a I didn't get a signal, but this is the area. As price comes back to the order block, these areas, that's where price creates the order block and comes back, and you could be looking for some lower time frame reversal signals in this area for that move down. It already happened, right? I didn't start earlier, but it already happened. We could be looking, and that could be anything not anything you want, but you're free to choose whatever tool that indicator the market is reversing, right? Can be candlestick, can be an indicator, but by just knowing the area in advance gives you a huge advantage of what we could possibly expect, right? That's the sell setup. So I'm gonna take a little break, not to occupy the whole space with only me talking, before I continue the analysis some minutes from now.
I was muted. That's a good analysis on the pound. We still need that confirmation, like that break to the downside. We'll see if we have it. If you see if you have it or not. But it has been a hard. It has been a hard pair to trade in the last couple of weeks. Just stuck in that range, and that's also visible on the dollar and euro dollar as well, which lead into potentially trying to find some other assets that maybe be trending a little bit more than that one, unless you like to trade ranging markets. So that's maybe a strategy for you. But if you are looking a bit more for momentum, for continuation, that's where maybe having a little bit of more portfolio, more assets, including in your own portfolio, can help you to at least to find better opportunities. Because I know that there are many traders that they get just stuck within just euro dollar, pound dollar. And sometimes that may not be the best option.
Yes,
we'll see.
And exactly so. This is although I'm I'm very specific and I mention signal all the time, I'm very against the idea that we are here giving signals. We're not. I do my best not to give the impression and the actual these are not signals. These are just ideas, but you can, like, a confirmation can be considered a signal. It's a sign, not a literal signal for you to enter the market. It's just a sign that one time frame has completed its message, basically, right? In that analogy, I see the each time frame as a frequency at which the market talks to us, right? And at one time frame can tell you buy, while the other ones are not aligned back, and that's what I mean by a signal, not necessarily an instruction to enter. And actually, I'm very against basically signals, because it doesn't help you. Doesn't help you at all becoming a better trader. A signal is just an easy way out, which is in the end the long way to learn trading. You'll only end up having to learn it anyways, the proper way. So why go through that process, losing time and money? Because in the end, I think there's no better way than just learning it and having your own signal, not depending on anyone else. Right. So this is the this is the short, as I indicated. Well, there was one question. One Enzo the Picker asked, "Why is this guy wearing a mask?" I ask myself that question every day as well. I have no idea. If you guys have an idea, let me know in the chat. So let's see. So it is not a signal. It is not a signal at all. So excuse me. So that's the sell side. That's the sell scenario. So that's why I'm looking for sells from current areas, looking to get at least to that TP. And if we get actually already have the reason to expect price to go much lower, which is this outside bar. So we can start to think, okay, maybe we can expand this TP for a little bit. The next structure is the lower border of that structure on the daily, which is a little bit lower, right? That's one thing. And the other target that I could have, if this one pushes through, has follow through, would be, let me mark it up, which would be the let's see, the weekly expansion or weekly ATR, which would be around 27.59. It doesn't mean it's going to reach it, but that would make sense in terms of the ranges of this week's. That's a long way to go, I know, but that's based on the ATR. So of the weekly ATR, that is, right? So price can, if it doesn't go any higher between now and the end, this would be 100% the ATR, which makes sense in terms of the ranges. The other thing I need to say, though, is that, of course, as you can see, that reversal pattern is this market structure is bullish, right? So it's a little tricky setup, especially if you're targeting something much lower than the complex where we are at currently. So we have that. That's the sell side. Actually, I need to. I think I deleted it in the process of talking to everyone or explaining it. That's the daily. Okay, so that's the bearish structure. Now look at the bullish setup, right? What we have is a bullish order block, which is not part of a quasi, and it wasn't fresh by the first time it hit, and obviously it wouldn't be at the second one either. And yes, so I was gonna say something, but I'm gonna leave it. Quasi, I will explain in a couple of in a short while, when yes, as soon as I finish this. So the daily order block wasn't fresh at the place where by the time price came back to it at our first retest, and obviously that means on the second retest it's not fresh, it's even less so, right? So there wasn't a reason for me to look for a long. However, what we did get, we can understand that even though it's not part of my system, it's not an area, it's not a criteria, it doesn't signal me, it's still a demand area. And by the look of price action, look at this outside bar, right? We are having a lot of action. The tug of war is in plain, full steam on both sides. We're getting outside bars on succession, bearish and bullish, or actually it's bullish then bearish on the daily time frame. We did get a nice reaction of this order block. So to me, it's giving you on both sides indication that it wants to do either one, right? So both sides are preparing for a continuation move. Only one will win, of course, but we can take opportunity in trading both of them. Now, the first one is this. So we have a order block reacting, or price reacting to a order block, which is not an entry order block because it's not fresh and it's not part of a quasi, but it did create another structure, which is this, where we are currently, right? They're very tight, as you can see, where you have bearish and bullish overlapping each other. But that's what the market is telling us, right? It's getting compressed. These structures are getting closer to each other, even overlapping, before the market makes it move. So in here, right, the fact that it created an outside bar after the creation of this order block tells me, let me see, this is the order block that was created, bullish structure. Too wide for my liking, but that's what it is. And it created a bearish one. That's not what we want to see, right? So the sellers have the advantage, so to speak. They seem to have more grip of price. when price comes back, if we have an H4, a bullish H4, and a bullish reversal pattern, right? I'm trying to give both sides, looking for where the opportunity is, right? So don't get confused. We have, this is the neckline on the H4, and if we look for entry order blocks, right, in this leg from this top to that low, this is the head, and that is the top of the structure. But because it's a bearish reversal pattern, that means that we need to be looking in between for the structure, and I don't find anything. There's no order block on the H4 to work with. So that's another reason why I think the sell scenario is a little bit more likely, because you have an H4 order block that is, doesn't give you an entry opportunity. The daily order block, the long side, was the next candlestick combination it created was very bearish, meaning, the buyers did take control by creating this large outside bar, but they failed to follow through, at least holding up. It hasn't been invalidated though, so we are in a daily order block, and we could still have a reversal, even though it's not part of the quasi here, not part of the structure to the left. We can still build a new reversal pattern, meaning we could still start something like this on the H4, and then if this happens on the H4, we would then have the daily order block also in alignment. That's why I said I think both sides have a, they still have the possibility to push price higher from somewhere in this order block, a little bit lower perhaps, and we have that both sides, on the sellers as well, already signaling on the daily and on the H4, meaning, if you ask me, I think both of them, the sellers is offering the best opportunity, best probabilities. But if if we have enough alignment, then a buy entry, a buy, signal I will take as well. And you might ask yourself, why do I take both sides? Doesn't make sense. It's either going to go up or down. Yes, that's true. But the thing is, by using top-down analysis, I'll probably going to be, getting an entry all the way down, which, with my stop loss perhaps at, maybe 10, maybe less, usually less pips away. And if one of them, this would be one scenario, and the other one would be something like this, right? Also with perhaps a 10 pip. Let's just, for argument's sakes, put it at 10 pips. It's actually 13 now, right? 10 pips. You can see that even if I do both of them, right, and actually the target would be this. If I try both of them and only one side is correct, I would win between 7 and 9 R and lose 1 R perhaps on the other side, right? So you end up winning even if both of them signal. And that's the beauty of trading a high risk reward ratio, because you don't have to be right all the time. You can trade long and short as long as you have a system to get into the trade consistently and not over trading. And you just one of them needs to comply. Well, not comply, do its thing. So that's the very interesting scenario we have on GU. Buy and sell, very nice with alignment opportunities. So it's for us to pick, and I would pick both of them, by the way. I'm looking for an entry on this area, the area that is between the if you didn't get in already on something, let's say this order block when it was retested, or perhaps here as this was retested, you have multiple structures, opportunities to get back, not to get back, but to stack your position for that sell trade. Thank you. No problem.
Quickly, yeah. Yeah, we'll see what the pound will
Dirk,
do.
Dirk is not here.
Yeah, he left. He left. Maybe back again if he finds any gold setup.
I'm sure he is. He's always bringing good ideas for his, showing, sharing what he's doing. I like that a lot.
Yeah, somebody saying buy pound. But what other assets, guys? What other assets do you want us to take a look at? Let us know in the comments so we can take a look at that. So feel free to write it down.
Yes.
Do you want to try that?
There. I'm not gonna confirm nor deny anything. The quasi, someone asked in the audience, and always I'm gonna be explaining this because we always have, new people in the audience, and I'm happy to, because I mention it all the time, it makes sense to frequently talk about it. I'll say it before I still have like 3 minutes before my break, but we have the quasi is a reversal pattern, which is a variant of the head and shoulder pattern. The head and shoulder is one of the most popular trading pattern used traders from all times, and a head and shoulder is a symmetrical pattern where you have roughly I would say, maybe I should do something like that, and then something like this, right? The head and shoulder is where you have a head, a left and a right shoulder, and they're roughly symmetrical, right? In textbook structures, in the textbook explanation, this is the base of that head and shoulder, and you would target the height from the base to the head. You would add the breakout. This is the head and shoulder, right? This is not the quasi. You would take that distance, and that would be one time the structure, and the entry would be in once the base is taken out, is confirmed either by a close or some, depending on the way you trade it, and you put on this as the basically the one of the ways of trading the head and shoulder. This is the head and shoulder, right? Symmetrical textbook. This is the classical way of trading this pattern. Actually, I shouldn't eliminate all of it. What a quasi is a variant of that. So what it is the neckline is still here, which is the base, was the base on the head and shoulder, but typically the quasi doesn't look as symmetrical as a head and shoulder would, right? Doesn't have symmetry. The left and the right shoulders are not the same height. It can go way lower and still be a quasi. This doesn't look like a head and shoulder to a lot of people, but it can be, right? If you have objective way to identify the head and shoulder, to me this is still a head and shoulder. And what I do is, in my way of trading it, I'm not waiting for price to reach this level to confirm the reversal. That is not what I do. What I do is I look for sign of reversals in the creation of that right shoulder for the move down to that point. So basically, I'm trying to get in somewhere in here, putting my stop either above this or completely above the whole structure, and target that low of the structure for the completion of the head and shoulder. So it's different. That's my way of doing it, and you can but there are many ways to trade the quasi. This is just one way that I prefer. You can trade a continuation, because these patterns, they typically also continue to the downside, because in the end it is a sort of a head and shoulder, right? So you could trade the continuation as well. You could trade anything, just back test it, think it up, and build some rules on it, test it, and you're free to go basically. But that's the quasi, and it's short for Quasimodo, which was also asymmetrical.
We need to do a webinar both together. Talk about Quasimodo, and that stays the video, and then you can just start sharing the link. But I'm going to do a second part. So last week I started on the Portuguese channel. Last week was just basic introduction of the Quasimodo, and as I was doing analysis, I was kind of mentioning where the Quasimodo was. Today I'm going to focus more on the top and the bottom. Basically, when you're creating a Quasimodo, how can you kind of help us to predict which direction is the valid? Because sometimes when you look at Quasimodos as well, it can be a reversal pattern, but it can also be a continuation pattern in reality. And at least on my view, one of the answers as well that can help with that is also identifying where the top or the bottom, depending if it's a bullish or bearish Quasimodo, but where the top and the bottom are reacting from. What's the story around the top and the bottom that can lead into the continuation of the story of the pattern, if it is a reversal or a continuation pattern. But yeah, that's a beautiful pattern. Yeah, we definitely have to arrange. We have to arrange one day to do a Quasimodo webinar for everyone.
Sure, I think it's a great idea. I could do it in Portuguese as well, but the only thing is I can only say bom dia. So I'm gonna say bom dia all the time. It's not gonna help us.
No, do it in English. Do it in English. We're going to arrange. We're going to arrange in here on the main channel. We get together and do one.
Perfect.
I think that will be interesting.
Yeah, I mean, I love Quasi. I talk about it all the time, and it's for a reason. My system is based on Quasi and order blocks, and I'm funded, and I'm profitable, and it's because of these two concepts. I mean, they're so simple and so profitable. You just have to, approach them properly. It's not rocket science, and if you do it properly, it's just a game of waiting for your signal and acting upon it, and doing your homework, your analysis, your journaling and monitoring your quality of the trades and everything else. But I mean, in the end, you can simplify it in just having the system and trade it whenever it signals you. And it takes a lot of stress out of trading. You're not guessing where to enter. No, you know exactly what needs to happen to get your attention and what needs to happen for you to enter. And if those things don't happen, you don't enter. As easy as that.
Yep. Yeah, you become proactive instead of just reactive in reality, which is a beautiful thing. Which basically every pattern, like, because it removes the uncertainty. When of course it needs just practice to spot the pattern, because usually the journey of someone trying to trade a pattern is the first time you don't even recognize the pattern. Like maybe you draw a Quasimodo, someone that is new, when you're looking at the charts, has some difficulty even spotting the pattern itself. So you need to at least kind of design a little bit, even use a pen and paper and start putting your brain to recognize the pattern. So first and foremost, you don't even know where they are. Secondly, you start recognizing it, but only after it happens. Right, and yet sometimes can lead to frustration. Right, you can go maybe back to past. Okay, here it goes. There was a Quasimodo. Here's another Quasimodo, and there you go. But while it's happening, you still cannot spot it, so you have that difficulty to see it in the moment. Then finally, you start spotting it in the moment that it's happening. So that's basically third step, which is already really good. And now you can maybe start trading it properly. And the fourth step is, after so much practice and everything, now you actually can start predicting where it may happen, right? So we're actually starting to be able to spot it, or to create scenarios where it may actually happen, which now puts you in a much better position, because now instead of just trading exactly the conclusion of the pattern, kind of maybe the right shoulder, or after breaking the neckline and try to short it, you can actually start potentially finding new opportunities and developing maybe new strategies as the pattern is developing. And then you can start recognizing that, okay, if A, B, C is about to happen, maybe I can already, instead of just trading the last step from C to D, you can also maybe try to trade B to C or A to B. Of course, it's a bit harder, it's maybe a bit more advanced, but it's something that with time also you can develop in there. So, but usually that's the 4 phases. It takes time. Like, you don't think that you go from phase 1, phase 2, phase 3 immediately. It takes time. It takes a lot of frustration sometimes. Sometimes they're going to pick the wrong pattern. But that's the process usually.
Yeah, and I want to say one thing before I go, because my allocated time is over. Once you have a system with rule-based, it helps you a lot with your execution, your psychology, those FOMO and those revenge trading. Having a system, a rule-based system, doesn't guarantee you will not fall into those traps or make those mistakes, but it surely helps a lot, because you actually have something. You take the guessing out of it doesn't depend on you anymore. You just have to consult the trade plan and follow it, and the trade plan will tell you what to do, right? It doesn't depend on you, whether you want, how you feel about the last trade, whether you want to revenge it or not. That's following the plan. That's our job. And if you have a good plan, it will help you a lot. But we have someone in the background, a very esteemed trader, very successful trader. I'm gonna introduce him to us. Of course, it's Griff.
Hey guys.
Man himself.
Thanks, Victor.
Griff?
You give me a different introduction every time.
How are you doing, Griff?
Yeah, I'm doing good, thank you. How are you doing?
We are fine as well.
Good.
We are. I'm gonna leave you guys together. I see Mike is in the background as well. So I'm gonna leave you guys together. I'm gonna take a little pause, and I'll be back in about 50 some minutes.
Thank
Cool.
you, Victor.
Enjoy your lunch
Maybe
break.
before you go, maybe bring Griff's chart. Since Mike is
Sure.
here as well, maybe I'm going as well. So I'm going. Maybe if now Mike and Griff together. It's been here for a while. So thank you guys as well. I'll see you, I think, back on Thursday. Have a nice stream, Griff and Mike. Good morning, and yeah, good luck.
Awesome. Thanks, Pedro.
So, thank you guys.
Mike, thank you for yesterday covering for me. I'll be forever grateful to you, and goodbye.
Oh, Mike, I think you're muted. Or maybe I just can't hear you.
Is that better?
Yeah, I can
Any
hear you
better?
now.
There we go. Sorry, my mic was just turned down a little bit.
good.
How's everyone doing? How are we all doing? Let's see what's happening in the chat, and let's maybe give ourselves a little bit of background music as well. Let's just add a bit of chilled music to the background. So we haven't chatted in a while, Griff. It's been a few weeks since I last spoke to you.
Yeah, not since the first live stream.
Yeah,
that I
how's
joined,
how's your past few weeks been going?
Yeah, it's been okay, thank you. Oh, the Brits have taken over the live stream for the hour. Let's go.
Why
Yeah,
not?
I've
Why
taken,
not? We just need.
Yeah. I've taken only 2 trades this month, and both losses, unfortunately. I don't know.
Okay.
What's your trading style like? Have you taken many trades?
I've been taking a lot more trades because I'm more intraday. So probably far too many trades, if I'm honest. Yeah, I think Pedro was saying it earlier that the markets right now are just very, very choppy. With the kind of the macro news, nobody really quite knowing whether Trump means something or if he doesn't mean something. It kind of leaves a lot of uncertainty as to which way markets want to go. I've seen a lot of my predictions of where price is going to go generally play out, but not to the level of accuracy that I would expect them to. So, for example, pullbacks are bigger than I was necessarily expecting them to be, or continuations are longer. So So yeah, Durascal, yeah, I've been a degenerate. I have completely been a degenerate. I've been throwing money at the market like a complete and utter fool. I've been providing liquidity to the rest of you to help you all make profits. That's my role here. So what do you want to talk us through those positions that you were looking at, Griff?
Yeah, can do. I'm not sure how my internet's performing. Is my video lagging a little bit, or is that just for me?
You're lagging a little bit for me, so it might be your internet.
Okay, no problem. Let's try sharing the screen. Let me know how it goes.
No worries.
All right, how's this? Is it lagging a little bit? Let us know.
Let's have a look. It seems all right for now. We seem all right.
Okay, that's good. That's good. Well, there's 2 trades here that I've taken in March, and they're both on AU, and I'll show them now. I'm actually working on a new video series, which is a 5ers series, where I'm going to be trying to pass 5ers 100k high stakes challenge live, essentially. So I'm going to be doing 1 video a month where I share all the trades I've taken that month. So being as transparent as I can, trying to pass a 100k funded, 100k high stakes challenge. So I guess you guys are kind of going to be getting early access, seeing these 2 trades, because I discussed them in great detail in this video coming out later this week. So here's the first trade I took. This is a pretty classic continuation entry. I'll show you what I was seeing at the time. My continuation entry model basically just looks like this. So super simple. Prior price action, descending. We've got a really clear uptrend here. We've got these V's in prior price action as well, which I consider to be high probability. And generally, we're just seeing quite a clear uptrend. We've got strong breaks, small pullbacks. And yeah, I was just looking to get in on another strong break and pullback as the trend continued. So that's what I was looking for with this entry. It tagged me in. This was at 2 a.m. by the way, so I had to set my alarm to get into this losing trade, which is pretty brutal.
Wow. Okay.
And yeah, it resulted in a 1% loss this time. Yeah. What do you think? I don't know much about your trading strategy.
That's on the 1 hour, is it?
Your thoughts. Yeah, that's right.
And that was on Aussie US dollar, yeah?
Yeah, AU March 6th at 2 a.m.
March 6th. Let's have a look. March 6th at the 1 hour. So it would have been.
It's always interesting to see
2
how.
a.m.
Yeah, that's right. It's always interesting to see how different strategy kind of lenses apply. So like in this case, I think I was doing something similar with an entry last week or the week before, and I can't remember who it was. I think it might have been Stephen, and he was telling me how. Oh no, I think it was Alex, and he was telling me how, you know, he was looking for a buy in a similar position to me, but based on a whole different set of confluences, which is really interesting.
Yeah. So I've got it. Let me just pull it up here. So I've got it here. I can see later on that it actually did go in your favor, to some extent at least. It does kind of spike up there. I don't know where your take profit would have been, but it did obviously break that high that was created. But let me just pull up my charts. And so I've got the replay here as well. So first thing I would have done before looking at that was I would have just looked at the trail that was left behind by the move, because you're right. I agree. It's a very, very impulsive move. It's a strong upward trend. The only thing is what leaves a lot for kind of price coming back is when candles open up without any wicks, or if there's an inside bar. So you've got a wickless candle here. You've also got one. No, that one's not one. But I think we have one here. Yeah, we've got one there. And we also have several down here, I think. And that's not one, but that one might be. Yeah, that one is as well. So when those are on the hourly, if you then zoom out, you can then quickly start to see, right, okay, we've got an inside bar here on the 2 hour. Realistically, the main support of this move that I'd be looking at would be this here if it was the 2 hour. That's the first area of support that I can see that started that move. Now, before looking for anything longer, I'd be looking for, right, where can price target? What can it react from over in this area? And I'd be doing that on a higher time frame. Now here, this is I haven't looked at this prior to us chatting, so I don't know to what extent this is going to be valid or not. Let's see. Here we've got a perfect double top. So that's 2 4-hour candles where the highs are exactly equal. And so that would have been a target. So I could see it continuing. The only problem would be is this low. Here he is. Here he is. Here comes trouble. He heard his name mentioned. His ears were burning, and he thought,
my name was mentioned. I don't know. I just came on. I was like, you know what? Sorry, Michael, but I gotta say, I saw Griff, and I was like, I gotta come in and say hello to Griff.
Whatever. Alex sees me so often. He's like, oh God, not.
We've already gone through everything that we could possibly talk about today. We went through how to boil eggs. We went through how much the children actually cost, and is it ROI positive or not? And we came to the conclusion that it's maybe
expensive.
Yeah.
We came to the conclusion that the financial ROI doesn't exist. It's more of an emotional ROI, and even then, that's questionable. But yeah. So we're looking at a couple of trades that Griff took earlier this month, and it's just this pump. That pump on the 1 hour would have been a little bit risky for me, just purely because the way it does it is an impulsive move. And the way it started on the 15-minute, there's no real wick rejection. It's just started there on that move without any wick. So that would be potentially an area for me to see playing out. So I'd be curious if it does come and take that level before it goes up. Yeah, you see it's taken that one, and then it's probably going to go up past that take profit level that you had higher up. There it goes. So it would have come up, and it's taken these 4-hour double tops as well. So that level there, and then I think there's this one it's rejected from, and it's left it with one. Literally, I mean, it's nothing in it. But those are the kind of setups that I'd be looking for, is where price takes the high of the previous, and even quite often it's by 0.01 pipettes or whatever it might be, and all of a sudden price then shoots off. So that one would have been, I can see why you thought it was a continuation, but for me that would have been that low would have been the concern for me on that one. And obviously it then comes down and starts taking the rest of them.
Yeah, it's really insightful to hear how somebody trading a completely different strategy looks at one of my entries, and that's where I mentioned you, Alex, because I said we were doing something similar last week or the week before, where we were looking at one of my trades, and you were sharing your thoughts on that kind of entry, and it just so happened we would have been looking in the similar direction, which is pretty cool. But yeah, there's a few new things I haven't thought about there, Mike. Thanks for mentioning, candles opening with no wick at the bottom. That's not something I really thought about before.
Yeah, it only works for me. I've only managed to get it working on Forex.com. Can't explain why, but back testing on other data feeds, it doesn't work. But inside bars and wickless candles and Forex.com, especially with things like gold as well, can be really, really powerful. Interestingly, on Aussie dollar USD, just before we get into the other trade that you did, we still have this really high double top on the 2-day. So if you look on the 2-day chart, and therefore on the daily chart, on the let's have a look, on the Monday and Tuesday, they have the exact same price as a high, which is 3910. 63910. And so that for me again is major liquidity for us to target. At the moment, if I was looking at any kind of positions on Aussie dollar, US dollar, I'd actually be looking for buys. We've come down, we've tested this engulfing candle to the upside. We've taken the last area of liquidity on there. We've tested that wick, and I'd now expect us to start pushing up and going for the highs. But yeah, that's just something I've been looking at Aussie dollar, US dollar today, trying to find an entry, but nothing really clear. I did have an entry earlier, which actually hasn't been negated yet, although I did close it, because there is still liquidity down here that started the move. As you can see here down at the bottom, there's some
more wickless candles.
There's some more wickless candles, exactly. So again, I just see that as really impulsive moves at the start of an hour or a 4-hour candle suggests that something kicked it. And it could be news, it could be something else. And so that's when I tend to just keep an eye on those, because it can be an area for price to come back and just create equilibrium again. So yeah.
Took a cheeky little long on gold, but at the moment a very tight stop loss actually. But
as really tight as I would go for.
Wow, these are under 10 pip stop loss. What is going on? But we had GU went absolutely nuts today. So it looks like I'm gonna give back a little bit of profit, but it's really nice trade on GU today. If you want to pull that, what do you think of gold then, Mike? There you go, it's just taking me out.
Didn't take long.
I'd rather be, do you know what? I'd rather be wrong quickly than stuck in a trade for hours just waiting to see if I'm right or wrong. It either better go up, make me that I'm right fast, or that I'm wrong fast. I prefer that. And
do you know what,
Henry? I'm definitely looking for. Depends. If each kid gives me the characteristics of good trading, then I want 4. I want patience. I want selectivity. Is selectivity even a word? Selectivity. Decisiveness. These are really good ones, guys. We want patience, decisiveness, selectivity.
Jonathan, I'm just telling you now, Jonathan is going to kill us for destroying his 5ers stream of content, talking about the characters of children, and he'll be like, get on to trading gold, trade gold.
We don't want the characters of children. We want the children to give us the character traits of good trading.
Oh, I see.
And this is super, you need good context to what we're talking about. But,
that's true.
We need one more characteristic for good trading.
Hold on. Would they be training your patience?
Here we go. I told you
to watch themselves.
I'm always here, man. Always here.
So the conversation we were having. Okay, let's get rid of that guy. He's bloody so annoying. Get rid of him. So we had the conversation earlier that when you have kids, they normally, you get more patient. You've got to be patient with them. You've got to.
Yeah.
I can't remember.
When did we say that?
I don't know if we said that.
No, I don't think we said that.
Where I was going with this is that each kid gives you better characteristic traits.
Wait, you don't even have children, Alex. What are you talking about?
I know.
How would you know? You don't have kids. Ask Mike. He's stressed out.
That's it, Griff. That's a little bit.
Every single hour of the day.
Yeah, I've got kids on the way.
I've got it all
coming.
Oh, you got one coming.
Yeah, that's not my outfit there.
We'll let him back
you
on,
remove me
guys.
again.
Well, there you go. Here we go. We've got This Is It, Born to Do It, Craig David, which is actually the first ever CD that I ever listened to. By the way, if you don't know who Craig David is, check him out. Patience, decisiveness, selectivity, and discipline. That is what. If I have 4 kids, those are their names.
Yeah.
Oh, those
if
poor
I get
kids.
another kid, I'm just gonna name it Stop Loss.
Alex was pretty close to having a kid this morning. You know, he was a
We need context now.
Live on stream.
No. This is far more interesting. Just dropping a bomb like that and saying, "Yeah, Alex was very close to having a kid this morning." April Fools, wasn't it, Alex?
Yeah, my girlfriend watches this stream, mate. She doesn't watch the ABL stream.
And she got you good. She got
she got me good. My reaction probably wasn't the best.
She tricked you. Oh wow.
Well, mate, it was
that's
it was
a test.
it was 5:30 in the
test.
morning. It was 5:30 in the morning. I just got my coffee, sat down. We were talking, and she said, "Look, got to tell you something." I'm like, "Do we have to talk right now?" I'm like drinking my coffee, and then she pulled out that as an April Fool's, and I was just, my reaction wasn't favorable. So, yeah,
That's definitely a test, Alex. You failed.
Mhm. Yeah, exactly.
yeah.
Exactly.
Have you heard about
How's
the
your
new
test?
program that we're releasing at the 5ers?
Pardon?
No, I've talked with Saul. We're going to be releasing a new program here at the 5ers soon. Have you heard about that? We haven't announced that, have we?
No.
No. So actually, like, it's because so many people are actually not profitable. So we've decided that we're going to create an evaluation account where it's just flipping your position. Yeah, exactly. It's called the opposite, and it's basically going long whenever you open a short trade. I think it's going to be quite successful.
That would be quite successful. Very
Definitely.
Let's have a look.
Okay, I got work to do.
What is that for?
This?
Yeah.
I'm putting some things up here in the background.
I was wondering what happened to your background.
No, actually, it's just black.
Yeah.
He just turned up. He's forgot to pay the electricity bill.
Yeah. No, and I have settings on the camera, so it's actually darker than what it is. So I'm setting up making it a little bit brighter. The issue is, like, I got this acoustic panels in the background, and they're all black, and I want a white background. But if I remove them, they're all glued to the wall. So I'm gonna take the wall with me if I try to take them down. So yeah.
It just looks like you're just staring into the abyss when you turned around.
I know, but it's settings of the camera. If I maybe you can see something. No. Oh wow, that's bright. Okay, back to trading, and I'm gonna try to put like this.
I still think if we look at gold on the 5 minute, I still think maybe we're gonna hold and start.
I'm gonna put this in the ceiling.
I thought you were gonna say
This is
something
from
else.
IKEA. It's like a rail
Not on stream.
for
We cannot
curtains.
see you do anything with that on stream.
YouTube won't allow that.
Yes.
YouTube will ban us for that.
Yeah, we're not.
For what?
allowed.
For
Do
putting that
whatever
somewhere.
you want. Yeah.
Okay, I'm just gonna leave. All right, take care.
See ya. Alex, what did you say you're looking for on the 5 minutes for gold?
No, so look, if you're going to be a very, very risky day trader, I was looking on just on the 5 minute to see if it would just hold after it's taken out the bottom of that range. So that's on a 1 minute, and the idea would come from being on a 5 minute. Let me pull up a chart. Oops.
5 minute would look better if it was coming down to this area here for a reaction.
The only thing is the idea would kind of be invalidated if it came down to there. So that was the original. That was the trade that I was saying before we had this obviously impulsive candle, but it was just a continuation from here. But if we have a look, we're really in some really nice support. So you've just taken out this low right here and just closed above that 200 EMA while we are extremely bullish on gold. So if it was going to be, I would say, the trap or a grab of liquidity like gold does after it's been raining quite a lot, it still is in play to continue up as long as it doesn't break down, as long as it doesn't close and do something like that, then we're still in for longs in this area. So that's why, even though I've been taken out, if you want to be a little bit risky with just getting into the same trade, but just having your stop just below where you've been taken out, look, if I lose that, then it's, it's $200 and then it's going to be a full 1R. But I'd rather get back into that trade just to see if that is the trade that is just staying up in this range. So if, let's say we're just going to range here until news, getting into the trade right on the bottom with a stop underneath is the trade that I would say I would take. But yeah.
Where would your stop be, Alex?
No, my stop would be underneath the low.
Okay.
So it'd be here. This would be the trade. Let me double check. Where am I? Gotten a little bit late.
If the current 1 minute close is bullish, then that looks like a really nice entry for buys, actually.
Yeah, just because it's taken out this low. We're in a range, so just as you know, classic range trading, which to be honest, I don't really do a lot of. But you're
so good at it.
When you see it, you trade it.
There you go. Off it goes. That 1 minute candle.
Still got EMAs in these rangy environments don't really matter just as much. I'd rather, if I go onto a higher time frame, just see where the EMAs are, because they're more important. We could look this as having a inverted head and shoulders, or just figuring out as support. So you've got these wick down there, and this could be the next, and then just your typical would be the overall target. But because we've got news, I would not feel comfortable holding a bloody gold trade with jolts opening at the end of the day,
Come on, live a little.
Oh,
Traders don't get to do that.
Live a little, Alex. Come on. Live
It's an
vicariously.
interesting position.
yeah.
For me, we're definitely long, because the most recent all-time high started with a whole cluster of liquidity even on the 1 minute. So it's a very, very weak high with multiple wickless candles where it just shot straight down. So I can't see us not revisiting and trying to take some of those levels. So for me, we are looking very, very bullish. I have taken a position on that 1 minute, basically where you are right now, Alex. That is the trade, but I can see us going to the all-time highs potentially with that.
I can see gold continue. Like, I can see gold continuing, but when you've got news like jolts, do you really want to be? Do you really want to have a trade open with that? Doesn't matter if you've got size on it. Just if you're trading prop, and what's the point in getting the take profit or the stop loss getting hit, and then all the profits, you don't get the profits, or it's silly. So
would you see, if you look at on the 15 minute, or actually even on the 1 minute, let me just look at the 1 minute for a start. You've got that break of structure with that low on the 1 minute, which we broke most recently. Yeah. So from the bottom of there to the top of that most recent move on the 1 minute, would you not see that as a break and retest potential structure?
No, I wouldn't, mate, because the structure, if we have a look at, we just clean all of this out. The structure really would be looking at that. So anything in here is just long to me. Like, to be fair, it could still do that and it would still be long to me.
Yeah.
Even if it, it could even, do that and it's still bloody long to me. At the moment, gold is long, but it's like where if it doesn't hold this level right here, which is the level it's going to test next, which would probably be that one. Okay, if it hits that level, where can I get long from that level? Ideally, after it's taken out a load of traders, been filled in a load of orders, and then ideally that area would be where I would like to long to take out highs like this and highs like that. That's what I would ideally like. Now, if that failed and I'd lose 2R, then the last place that I'd probably look for is around there. Ideally. Now you could ask the question, what's the point of why don't I go short? Now I just don't sit right with me going short on gold at the moment, just for the pure fact it is just so bloody bullish and everybody's trying to short the thing. And to be honest, like we can look at every single time frame. Look at that. Look at that. Like every time frame is bullish. Why are we going to short just because of the 1 minute? You know, so that is.
It's exciting being in a trade on the 1 minute. I never get this much excitement with my trading.
The 1 minute can get too exciting, and that's the problem.
Yeah,
that is the problem for a lot of traders, because you can you could risk 1% of your account and still have 20 lots in the trade, and then your price, your P&L is moving really nicely, and people get addicted to those big numbers, and then suddenly when those big numbers have really become a detriment to you, when you need to size down, and it's a big detriment to newer traders as well. Big numbers really mess with new traders.
I can imagine news events hold a lot more weight on the lower time frames than on the 1 hour where I'm trading. So yeah, I bet like any high impact news, like you could, like you said, 20 lots is a huge position. And it's because you're trading such small stop losses on the lower time frame, I guess. And I can imagine it's easy to get slipped in news events on the lower time frame.
It's the thing is as well, it's like it's all relative to the account as well, because you can have a small account and a huge lot size. Like 20 lots to an account that's 250 or 100, it's not that much. But when you account on 50 or even less than that, and you've got 20 lots with a really tight stop loss, how many times are you going to get taken out the trade before the trade actually moves in your favor? Because you've got to let sometimes you can get really nice moves, but sometimes you actually have to let your trade breathe, and it can like stop and turn and play around and wick and just do loads of crazy stuff until it really likes to actually move. And if you've got a tight stop loss, that means you'd be, swinging your P&L up and down for, I should check those. Swinging your P&L and eating up all of your profits until you get that nice move. So all relative.
What just happened to your sound there, Alex? You suddenly sounded as if you'd fall into a box or underwater.
Is that what it sounds like?
Yeah, just exactly like that. Yeah.
That's
So I closed that buy on gold, and I'm now in a sell.
Oof, nice.
So I closed it at the top. Yeah.
I can understand why, because you're probably looking at this, aren't you?
Yep.
Yeah.
And there's liquidity below there on the 1 hour. There's an inside bar on the 1 hour, just down where that one standard deviation is below.
Yeah, I can see why.
We'll see how it plays out.
Yeah.
I would say, for me, I can see it ranging around a little bit longer, just based on how it broke the high of that range and then came back into it. I wouldn't be surprised if we broke into the just under where that stop loss is, and kind of bounced around a little bit longer, breaking highs, breaking lows. But I agree. I can see it going to where your red line is, breaking that high, the big high, later on. But yeah, I can't see it happening quite yet. Personally, I can see your logic, but yeah, these time frames are foreign to me. So I'm applying 1 hour time frame logic.
You're 100% right though, because there is news coming out. Yeah. Ideally, nobody knows what's going to happen. So
and it's gold.
So ideally, it would end up just ranging, but
your strategy
all I can do is see what's happening and then just react to it. And if it's wrong, then I'll just get taken out, and that's it. So
yeah, I think your strategy, like, you're already prepared to open a second position. You're just in this first position because you know, like, the long-term direction, and you have an opportunity to get into that. And then you're also prepared for the second opportunity to get into that based on your larger bias, which is, I think, is very wise. But then how do you determine, like, when you're going to stop taking trades? Because I guess if price descends, sometimes you can just take trade after trade after trade. Do you ever have a situation like that? Do you
ranging markets eat me up because I just trade momentum. So if I'm looking at the reasons why I got in this trade as well, is just how price was supposed to push down and then immediately got momentum to the upside. Now for me, the first like a couple of three candles on the right side shows me how much momentum comes in. So I can, if we turn out to just be ranging in a really, really tight range like that, and I could eat up my account.
Yeah,
I can eat myself out. The only thing is, I know eventually when we come out of that range, I would make all of that back and then more. So the only thing that has to my favor is the fact that I know eventually we'll come out of the range, and if I lose too much, I know where I'm going to stop. Let's say 3R, like 3%. If I lose 3% on the day, I am out and I don't trade anything else. So that is my mental stop. And then when I come back in, then I just make the 3% back and more. So, and it could be, when people here is like, there's quite a lot to be risking a day, to be honest. But again, what are we actually here for? And it's prop trading. And it's like, if you're not going to risk it and make the money, then what's the point in putting the time and effort to do it? Personal account, fair enough. Personal account, you're just going to end up... I could say that. I do that in my personal account as well, so...
I like your logic, because...
so backwards sometimes.
There's like a cost to missing an opportunity if it ends up being a winner. So by taking all of the opportunities, sure, it'll eat into your account, but when you do hit that winning trade, you're going to be in it, and it's going to cover all your losses. So it's almost a safe way of doing it if you have the capital.
Same thing happened today on pound. Let me just check where was my first position on pound this morning.
Dirk wants you to throw some liquidity into gold, Alex. Dirk, I didn't catch. What are you in, Dirk? Are you in a long or a short, or are you trying to get into a long or a short?
Dirk's profile picture is so good.
Oh no, Dirk's is brilliant. Dirk has such a cool profile picture.
Yeah, that's awesome.
I want LJ. If LJ's here, LJ, I want to see your profile picture. LJ's profile picture is just, you can't beat it. You really can't beat it.
I think it's time for me to get a refresher. If I put a message in chat, my cartoon profile picture could do the refresher, I reckon.
Don't worry, mine is from 17 years ago. So, and it's a picture of a random pillow fight that took place in the main square of where I live. Like all the 4 universities, all the students just decided to have a random pillow fight, and there was just like feathers and chaos everywhere. And that's just awesome. A picture that I've just had on my YouTube.
Feathers and chaos, pillow fights.
Yes.
Interesting.
I knew I'd get your interest. You get your ears pricked up on that one.
Yeah, all I heard was the fight and feathers, and I was like, what?
Dirk is waiting to get into either a long or a short, but it's only playing the scary trade around the 2 minute. Okay. Yeah. Yeah. It
So
is
what you were
it is.
saying as well, Griff, the same thing today. So for instance, I had a bias that I wanted to go long. I went long on pound this morning, and I wanted it to push up and take out these. I shouldn't say I wanted it, but I had the idea that it was going to push up and break these highs. Now I got taken out of that trade very, very early on, and this was on the ABL stream. But because I noticed that price wasn't breaking down where it should have been broken down, because if you have a look on, let's say, a 5 minute, this would have been the area which is marked out, the area that it should go down to. And if we've already broken structure, we should find quite a lot of momentum quickly down to that area. But when you're looking on the 1 minute and it was starting to slow down and creep back up, then for me it was okay, now we're going to go the other side. So getting into the second position, even though we've lost, or even though it's been lost, was that one, and it was taken out right there. So I trailed my stop with this one, which I don't actually normally do, but just because it started to get a little bit weaker towards these end moments, that's when I decided to trail up my stop just a little bit more. But again, you can lose, and then eventually you get one nice winner that makes it all up. So
yeah, I can see you're quite a flexible trader, Alex. You're like a Swiss Army knife, because you're using so many different.
I've been called a Swiss Army knife before.
You're even trailing your stop loss there. You're just. Yeah. I feel like you're a super flexible trader. You're willing to change your bias on like very quickly. You're willing to take further positions. If the first one doesn't play out. Yeah, that's cool.
I don't know if it's they're good traits, but they just work for me. They could be really,
you can
really
use
bad.
Them.
Yeah, really detrimental to a lot of people, but for me it just works. So yeah, I guess
that's awesome.
So,
one thing I
Griff,
noticed. Sorry,
go on, Griff. Go on.
I was just gonna say quickly. You guys target highs with you set TPs on the highs quite often, right? And I don't know if this is something you've looked into, but when I would be looking into targeting highs, I noticed that quite often it will just miss the high and then go back in the other direction. So it might be worth, like one thing I've investigated is I got more profitable when I was trading these kind of more range band entries. Instead of targeting the high, I would target 90% of the way to the high. And it would hit TP a lot more often. I'd get more wins, and it would save me quite often. So yeah, I don't know if that's something you've looked into.
Well, that's on the 1 hour.
That's on the 1 hour, but I could see it on your last trade there as well, when you ended up trailing it. But if you would have set a TP to 90% of the high, or maybe 80% of the high, it probably would have hit your take profit there as well. You might have squeezed out a tiny bit more. But yeah, I don't know. That's something I thought was worth mentioning, because it's benefited my research at least.
It's like those big pivot highs and pivot lows. It's like if price comes down and takes those, we've got a change in trends. Whereas it's like when it's on like the lower time frames and you've got all of these like weak levels, and then say that's like a big pivot that you'd probably target on the 1 hour, correct? You'd probably target that.
Yeah, or 90% of it.
90%. So the reasons why I would target, all of these highs is just because I project that the price is going to come over to there, and all of these like little highs are just where traders probably all have their stops, just little areas where I would trade back into those, and that facilitate that kind of sprint high where you would get out at 90%. So that's the problem. I never catch those big moves. I remember the first time I spoke to you, and you catch those monster trades just by trailing your stops.
Yeah, that's just because of the trailing.
Yeah, I wish.
Yeah, but I probably wish I had your win rate. Like, my win rate is just awful sometimes because I am depending so heavily on those huge trends. which we haven't had in a while now, which is why strategy's been slow for me, my strategy.
Does that get frustrating?
Yeah, definitely. But then just doubling down and kind of, I've got a lot of confidence in the strategy because I've been trading this one strategy for like 5 years now. So if ever it's frustrating having a big losing streak, which I am in at the moment, I can just look at my backtesting data and be like, yeah, this is normal. You know, this would have happened in 2018, maybe 2014, 2015. It doesn't happen often, but like every 4 or 5 years with my strategy, there's like 10 trade winning streaks sometimes, losing streak, sorry. So I'm okay with it. Yeah, it's just my first time having it IRL, not in backtesting to this degree.
Do you ever feel like a little bit of like I wouldn't say craving, but a way of just, you know, I want to go and try something else, or I want to go onto the lower time frames and find setups? Do you get that?
Yeah, definitely. But I guess rather than changing the strategy completely, I just focus on like evolving it. So I guess if anything, it gives me a hunger to go and explore some new ideas, some new concepts that I can overlay onto the strategy I'm already trading, rather than changing the entry model like completely. That's my approach to when I'm feeling like that, which is, you know, natural. Can't avoid that feeling.
Do you feel some of the guys that you teach and stuff like that they do better on the higher time frames than on lower time frames?
Well, a lot of the people I teach all have only traded the higher time frames. I mean, it's difficult when if they've come from a lower time frame strategy, it's difficult for them to be patient and be disciplined. Those are the main struggles. But I'd say profitability is the same on all time frames. It's interesting because taking more positions versus taking fewer positions, it seems to balance out in the end based on spreads and commissions and win rates across the time frames.
Yeah.
What about your other trade, Griff? Sorry, we kind of digressed with
No, it's okay.
And
I was happy to do that because I think we spoke about it a little bit last week. We might have a different audience, but I'm happy to go over it again because you've not seen it. It would be interesting to get your thoughts. Let's see. Oh God, I was wondering what was happening. I'm
just selling from up here at the moment. So this little reaction here, touching the EMAs, and then it's still pushing down. So it's taking its time, but we've still got this liquidity down here. So
yeah, what I don't like is the fact that it's had so many times to try and push up, and it's now the range is getting so much tighter.
Yeah,
it's like getting tighter and tighter and tighter. I'll pull up your chart, Griff.
Oh yeah, sure thing. Yeah, I was really confused for a second because I was like, "Oh my God, where's my trade?" And it's because I've been looking at the bloody 5 minutes because of you guys. I was like, "Oh my God, we're
gonna get you to invert your chart soon."
Yeah, don't let him invert your chart. Whatever you do, do not let him invert your chart. Oh, hang on a second. Here we go. Anyone just wondering about profile pictures? This is the legend. That
was my trading account started like 2 weeks ago. My trading account was LJ's.
That's awesome. So this entry here is just a flag. I'm just looking for a big impulse, preferably from nice price action. This is the kind of thing I'd consider nice price action. And I'm looking for a pullback, counter trend candle. So we're making this flag low, which is what we got here, and then a break of that flag low, which I guess is like a liquidity sweep on a lower time frame. And then I'm just looking for an entry candle. So that's what we've got here. It's hard to see, but right here we've got the counter trend candle, and then I'm just looking for a break of this low. And the idea is that we're kind of sweeping liquidity on a lower time frame. And yeah, price action wasn't the best. It's kind of range bound. But because we'd broken out of it so significantly with this really nice impulse, in fact, it's an established trend. There's a push up, small pullback, another push up. I was happy to take it despite the more average prior price action. And the setup itself was pretty much just perfect. This is like a 10 out of 10 flag for me. It's just crazy that some years these trades will just fly, and it'll go and it will keep trending, and then maybe we'll get an ascending and then reverse, and I'll get out up here. And other years like this, it just straight loss, unfortunately, and that's how it's been going for me recently, just the last few months. But I'm super aware of that, and I'm being really cautious, only taking the best of the best, the creme de la creme trades. So yeah, that's why this is the second trade I've taken the whole month.
How do you
interesting, yeah, because it's like I look at that and I feel like there's no like level, like obviously I can see levels, but that's why I use EMAs, because it kind of like maps out and shows me like that dynamic support and resistance. But you really you see that. How do you know where the level, like what level that you want to trade off? Really, what kind of like fires you into that trade?
Yeah, it's interesting.
You know what I'm trying to say?
Yeah, because like if this flag formed, am I able to do? Let's see if I can remember. I think you can like literally take a copy of it.
Yeah, ghost. It's a
ghost feed.
Yeah.
Oh, not quite.
Not quite.
It's the bars pattern.
Yeah,
this
try
one.
that.
Yeah, there we go. So there's my flag.
Mm-hmm.
If we were to get this here, I probably wouldn't take it because we're still too much within the range. And I know what you're saying about levels, and I treat them quite subjectively. I really do focus on like candle by candle basis, with each candle losing significance the further back we go. Mm-hmm. So because we've kind of like looking left is what I'll do quite often. I'll just look left, like what's to the left. And here we've just broken above a high, another high. We're still within this high. Whereas with the actual pattern we ended up getting, it was way up here. And it's a pretty good rule of thumb for when I'm taking these flag entries. I basically just want nothing to the left. And that's how I do it. I mean, there is exceptions to that rule. For example, maybe a descending channel, you know, there's something in quite close proximity in that case. But like I wouldn't take it from a range like this. The range would have to be where this one is. But yeah, I guess I don't know if that really answers your question, but it's quite discretionary.
Let's say on gold, did you not find anything really on gold? Because there's not really much going on to the left. It's very like break, retest, continuation type of trading. Would you be able to find something on that?
That it's tricky with gold and indices because they just trend and trend and trend. Whereas Forex, if you really zoom out, there's not really a huge amount of direction.
Massive range.
Yeah, it's basically just a 20-year range, unless it's the yen. Or is it the yen? I don't remember. Yeah. But yeah, gold and indices, it's quite interesting because you think it would work really well with my strategy because it's just trending. And it is something I've explored, but unfortunately with the way that I do my trailing stop loss, and the way I do my management, quite often I just get tagged out. So I'll take a flag in gold, you know, maybe we get a flag here, and quite often it'll just tag me out and then go, or it's just so choppy. Although it trends, it's a lot of these pairs are just they like to break on both sides while moving in a trend. And I think we touched on this a little bit last time, Alex, where it was like a trending liquidity sweep, where you're kind of trending, breaking the lows, and then continuing trending like this, you know, breaking the lows to continue fueling that uptrend. And that's something I've explored, like a trending liquidity sweep, because unfortunately this doesn't work with my strategy because I would be taken out here, I'd be taken out here, and I just can't capitalize on the whole trend.
Yeah, fair enough. Totally understand. I guess that's why pairs like EU and GU are a lot easier to work as well in your strategy, because once they actually go as well, you don't see, obviously you get those kind of wiki kind of price action, but not like gold. Like gold literally puts as many people in pain as much as possible before it actually makes its move. It's a little bit like Bitcoin when it does its thing. So if you're following the trend and then your stop loss is there and then you're just taking out, then it's obviously you've put all of that effort in for no reason at the end of it. So
Yeah.
Gold
Ooh.
is a psychological roller coaster.
Oh, it sure
Way to
is.
describe it.
Lots of highs and lots of
I had
lows.
to cut it just a little bit short just because it really didn't want to push higher, did it? But it's now doing the exact same thing. And I wouldn't be surprised if it closes again on top of that 5-minute range, on top of that 200 EMA. But
What looks?
I know
what looks good
LJ's short. He just said he's short as well.
Yeah. If you look at it on the 15-minute, what convinced me most was this engulfing candle here on the 15-minute. We left this one behind, and it was the price action that said that we were going to leave this inside bar. So we've still got liquidity to target, but this is much more powerful liquidity. So if we go down to the 1 minute that you can see there, we've got another engulfing candle. So we're saying, right, we're fine leaving this wickless candle for the time being. Let's go further. And sure enough, we're selling off even more.
Where's the target on that one, Mike?
I will be taking partials at 3126, 3126.50 probably. But it all depends on whether we bounce off this 5-minute engulfing here. So we've got this area here where price came down and then pushed straight on up, and it really had a big impulsive move. That was basically saying, right, we're going to leave this area of liquidity. But if you look further down onto the 4 hour here, if you look at the 4 hour, how it's forming right now, if we take this low down here, we've then got a really nice engulfing bearish candle, which could take us down to 3117, I would say. It's all really just to see how it plays out before the news, because we've still got an hour and 45 minutes before the news, so still plenty of time for price to decide which way it wants to go. But for now, that's a really nice bearish move. So we'll see.
Wicked. Well, I'm going to see you later, Griff. It was lovely chilling with you and talking about trading as we always do.
Yeah, thanks for having me on, guys.
It's always a pleasure to have you, mate. Always a pleasure. We've got Mr. Order Block himself waiting in the background. I don't know if he's ready to join us or not. Or if he's drawing more order blocks. We'll see.
Anyway, guys, see you later. See you soon.
Cheers, mate.
Bye.
Take care.
See you. Right, I'll be shooting off now as well. Good luck with your positions.
No worries, Griff. Cheers, mate. We'll speak to you soon, yeah?
Yeah, see you soon. Good chatting. Bye-bye. Bye, everyone.
Cheers.
Bye-bye.
And then there was one, at least for now anyway. So gold, I think we're still going to see further bearish momentum. It's showing some really strong sells, probably trying to get the best positions in before the news hits later on. That's my expectation on it at the moment. It's struggling to break this low that it's just made, but it hasn't dipped into that 5-minute engulfing candle yet. So I'm still not necessarily looking for any kind of reversals. I want to see it come into this area first before it does anything, and start changing my bias. So probably currently now at a 1-to-1, probably about a 1.5 R right now. Which isn't too bad, but certainly I'd want to see it heading further down. How do you partial out of the trade? What's your go-to position management? It depends really, CJ. It depends on what price is doing at the time. So I won't just suddenly say, right, I've reached this level, out we go. I will look at it coming down, for example, on the lower time frame. What does it do in this area? So the reason I've got this marked out is because on the 1 minute, we've got this really nice area here with this engulfing candle. So I'd be expecting price to come in and retest this wick. And it really just depends what happens at that point. If it breaks past it, it means we've got a lot more bearish momentum coming in. And so probably I would leave more of a trade to run than, let's say, if it doesn't, because it hasn't necessarily negated the trade. But I don't want to obviously miss out on some profits by just letting it run back up to break even or something. So yeah. Helena, I'm currently in a sell on gold from these highs up here, from this move down here, but we have got this long trail of liquidity left behind. So at the moment, I'm in a sell, but we will have to wait and see what happens. The previous day high could be problematic, John says. It could well be, John. It could well be. But we'll see. At the moment, I'm conscious that we've got this very, very long wick, but lots of liquidity left behind. So there's a lot for things to play out before the news hits in an hour and 40 minutes. So yeah, and Victor is back. How are you, Victor? How was your break?
I am. Break is fine. Break is as usual. Nothing out of the ordinary. But before we slip into or segue, transition into the next phase, I would like to play a little video.
Go for it.
That is I hope it doesn't sound as loud as it did in my headset, but if not, then it's good. It feels kind of I like that intro, but it feels kind of weird. We have Diana as well in the background. If whenever you're ready, I see you are. So how are you doing today, Diana?
Good morning, Victor. How are you? I'm a little off camera here.
Gotta remember, yes, good morning to you.
Oh, that's right. I know.
Yes.
Same. I'm so used to saying good morning, but it's not morning for you.
No, but it's perfectly fine. Perfectly fine. How has your morning been so far? I suppose you are getting started, looking at the market. What are your thoughts on opportunities today? What are you looking at?
I'm at the beach this week, so I'm in a different location, sleeping in a little bit more, taking it a little easy. Hi, Vinicius. I saw you said hello yesterday as I was jumping off, and I missed your comment. Good morning, Fabian, or hello, I should say. Hello, everyone. Marina, hello. How are you feeling, Victor?
I'm doing just fine. I see we have a lot of people in the audience. Very happy that you're joining us today. You have quite a following, Diana.
How sweet. That's so nice.
And
I like your new intro video. That's awesome.
Isn't it? I like it as well. I was pleasantly surprised when I saw it the first time. Yes, it's nice to have some kind of movement like that, video editing and so on. Yes, it's nice.
Turned out great.
Thank you. So you have you're at the beach, you said. No, that's good. You're living the life of we're all well, actually, one of the things as a trader, as an aspiring trading, or as anyone who's wanting to be a profitable trader, that's what they want to be telling everyone else. I am at the beach. I am doing this at a cruise ship, living the life. So it's nice to see you in that situation.
It's probably not all that fancy. Just here with my family, enjoying they have a break from school, so we're just having a fun time, riding bicycles, being outside. We've been having a blast, enjoying good food, eating different. It's been really fun. Indeed.
That's the important thing in life, right? Sharing with family.
Not at all. Just regular holiday. I think you call it a holiday, right?
Yes. this is you're seeing it all. You're seeing it's a regular day for you. It's probably at the pool on a five-star hotel with cabanas and so on. I know you're playing it down, Diana.
No, just
You don't have to be so
kid-friendly.
modest.
Fun vacation. I went shopping with my daughter yesterday and played football on the beach with my oldest and watched my youngest dig a huge hole, or not super big, but dig for him a big hole, and it was really fun. So somebody's asking about the link on YouTube. So it might be an incorrect link that we have in the description. But if you look at the bottom right here, you can see my what do you call that? Not my ticker, my
username handle.
Username. Yeah. So if you look for this on YouTube, and you can also find me on Twitter, and that is the correct name. So search that and you'll find it there. And then we have a couple of questions on gold. So Victor, if you want to, do you want to give your analysis on gold, and then I can talk about it as well, or what would you like to do?
I'll gladly follow your lead any day of the time, Diana.
All right.
Let's do that.
All right.
That's I'm gonna then look at gold. Gold is of course a what do we call gold? Is a eye catcher. It's something like you cannot avoid gold, right? It's the key asset, the top of the town. All right, so we have on the higher time frame, of course, everyone knows super bullish, and the bullishness isn't going away to a team, right? So we don't have any structure. There's really nothing to use other than it's all bullish on the higher time frame. We go to lower time frames. We are looking at a bullish market structure, an uptrend, textbook. Nothing, price is not even retesting the order block to create those demand areas before continuing. That's a very bullish sign. It did leave. I have to check with the other time frames if this is an actual. It looks to me like an actual order block. Other than that, there isn't really anything. It's not coming back. It's leaving those imbalances as it is shooting up. So that's it on the higher time frames. We haven't reached the ATR, the 100% ATR for today. So there's still room for price to push higher and even make a higher high, make a new all-time high today because of the ATR, the range of this day. We have a demand area below us. It doesn't seem like price needs to get there. At least price action currently doesn't seem like it needs to get there. However, I'm not sure if I can share this. You're not seeing it, but we do have in about an hour and 48 minutes, we do have manufacturing PMI and JOLTS job opening. There we go. That's the economic calendar for today. And I'm sure those disciplined traders among you know this already, that we have this news, high impact news coming up. That could change everything, right? Price could momentarily go into the order block we have below before, I'm not gonna say it's gonna bounce necessarily, but that's where the opportunity will be, right? Will it reverse? Will it continue? That's the only thing on the 4-hour time frame that I see. So if price comes back, that could be a nice area to get in to this trade. And for the bullish, you want to be very careful going against this trend. It is so strong. I wouldn't want to be standing in front of a freight train, because that's what gold basically is. It's going, full steam ahead, and it's going heavy. You don't want to be, testing your luck and going short this. And if you go short, you better keep it short, pun intended. Mm-hmm. So that's gold. I would say we can see bullish order flow by the creation of order blocks on the H2 and H1 as well. So I would say it's very healthy. It's a very healthy uptrend. everything seems there's an outside bar there, so I could assume that whenever price gets there, we will have some kind of a reaction, a bearish reaction. But we'll have to see something like that. But eventually, I suppose price will break out. That's my, initial idea if I were to, pick a side based on very little currently. But I think the opportunity is if we get if we get some kind of a surprising news in with the JOLTS opening, for example, during the day, we might see something of a reversal or a pullback into that demand area. And I think that's where the opportunity lies. At least to me, that would be something that I'll be looking for. Other than that, if we get a continuation, I would wait for that order block that's not there yet on some time frame, maybe the 1, maybe the 2, and then trade as it comes back into that order block for that continuation higher, and perhaps we're going to that 100% ATR today. Let's see. I think it should be easy peasy to do that, and by some. So that's basically, there isn't really an area of interest other than the structure we have below, and for there are minor demand areas in between as we're going heading higher.
Yeah. And Victor, can you explain how you map the ATR on there?
Sure. I would gladly do so. If what I do is I use and everyone can use this in, everyone can use this. You can find the ATR indicator in Trade View, not Team Viewer, Trade View, and you go to the daily, of course, right? It's one of those indicators. I have many of them, so just look it up. ATR, it's right there. Average true range, and you go to the daily time frame to get the daily ATR, and you hover over the current candle, right? And currently it stands at 35.33, meaning dollar is, at least today, looking back, 5, or the default setting is at 14, but I have it at 5. The last 14 days, not including today, of course, has been actually, I think it does include today, but I'm not sure how the calculation is. But in any case, it takes the last 14 bars and it gives you the average, meaning it gives you an average range of the day. And if you know the direction, you can already know where it's likely to reach, right? And the direction is, so far, everything is on bullish. So we expect that direction, that range, to be expanded to the upside. And if you have 35.33, it doesn't have to be very exact. You have to treat it as an area, but you take the current candle of the day, you take the low of the day, and you just measure when it's 35.33. And as simple as that. And I'm sure there are indicators that do this automatically for you, but I'm old school, so I like to do it myself. And this gives you an idea if the low of the day is going to be the low of the day eventually, the low of the day at the end of the day. That means that 100% on average, this asset will reach 100%. That's the average. That's what it means. There were times where it will go over it, and there were times it will not reach it, right? Because it's an average, it's not exact. But this gives you an idea. Do we still have room to go higher today? And we do, right? Based on this, and especially if you consider we have news coming up, right? If the news is favorable for gold, then we should be able to reach 100% ATR, right? So you got your direction and you got your range, what you can expect realistically. And the only thing with this way of projecting your, the day's expansion is that the average is, because it's an average, it's what a normal day would expand to, right? And so the question for each trader using this is, is this today a normal day or not, right? If it's NFP, it doesn't make sense for you to be using 100% ATR because it's not a normal day. If it's presidential election day, that's not a normal day. So it's up to you to see, how normal, how average today is. And that takes, some experience, but I'm sure most people will agree. And, high impact news, a big news like Fed rate decision is not normal. That only happens every so often. So those are the things you need to watch out for.
And are you saying that? Thank you for sharing that with us. I haven't seen that indicator before. It's a little hard to see on the screen, but that little yellow line, that horizontal line,
Yes.
is that where it's saying if it gets to that point, that is the 100% ATR? Did you
Yes.
plot that on there, or did the indicator plot that for you, or you're saying you're old school, you plotted it yourself?
That's exactly what I mean, Diana. Yes.
Okay.
I'm sure it's not a very sophisticated way. I do it manually, but I like doing it. There are indicators that do this automatically. They put the 100% ATR above and below, because you also have one below. The same thing. In this case, I only plotted to the upside, but if the current high of the day will be the high of the day at the end of the day, right? That means that 35.33, that is what we can expect. That's 100% ATR. That means that a 31.13 or a little bit higher than that, that's going to be let me measure that again, right? It takes a little time, but I don't mind it at all. Actually, I should zoom in to have a better, but it doesn't matter. It's roughly there. You have to take it. It's an average, right? It's an area. It's a band. It's not necessarily a very fine line, but this is the range of today in terms of if it were a normal day, then an average day, then it should reach. If it's going to go up, then it should reach that upper line, and if it's reversing, it should go to the lower line. So it doesn't tell you the direction. ATR doesn't tell you the direction, just the range, the average range to be expected today if it is an average day, right? And so you have to know when to apply it or not, but most days are average. It's only rather the exceptions when you have holidays. That's the opposite is going to be less than the range, less than 100%. And we have those high impact news or a high, Trump telling something about the tariff. That's something that, would be considered not average, right? Mm-hmm. Although since Trump has been in the Oval Office, it has become something quite average, quite common.
He's been a little more well-behaved lately, hasn't he, with his tweets? Seems like.
I suppose so, but yes, I think so. He, in comparison to the first few weeks, yes, I would say so. Yes, but then again, he's Trump. I mean,
you never know when it's coming.
That is, you never know, and that's the good and the bad about having a leader. A strong leader, like he is a strong leader. You agree with him or not, he is very strong in his opinions and his actions. So he is a strong leader, and that's the good and the bad of about him, because I think he gets things done. It might not be if you agree or not, but at least he gets things done. But also he's not afraid of breaking the mold. We saw that in his first term, doing things very differently, and he's not going to be a different president this time around. So I think that's a good thing for a trader, right? This having someone willing and able to surprise everyone is a good thing, I think, for opportunities.
Can you show us one more time? So someone's asking how we can get the indicator. Pretty much, it's a standard. You can find the ATR standard in TradingView. So there you go. It's one of TradingView's regular, their regular normal trading indicators. So it's pretty easy. You drop down that little box that he selected up there, type in ATR, and it should come up. And like Victor said, it's set to an average or a regular default of 14 days, but you can change that if you like, and that will just give you the ATR over the last period that you select. And someone else had asked Victor about your handles. Do you have handles on Twitter or YouTube where you connect with traders? Where can they find you?
I'm a handle-free guy.
Oh.
I'm not. I don't have much of a social presence, to be honest. Yes, you can find me here at YouTube in our live stream. And I'm on Discord as well, so you can find me there. Also at ABL, we have a community, the AlphaBeta Lab, which is very promising, has a lot to offer, great opportunities. So yes, you can find me on those places. If you go into the Discord community, you will see I'm one of the moderators as well, so I'm easy to find. But in terms of socials, as in Instagram, YouTube, and so on, not really, not so easy to find. I'm not able to be. I'm not there to do things.
Well, it sounds like there's a lot of places for people to connect with you if they want to connect.
Yes, there is. There's enough. I'm quite accessible through those channels. YouTube, you can find me here. Four times a week, so it's I think it's I'm not so difficult to find.
Great. And somebody had asked if I was going to teach my kids how to trade, and absolutely I'm going to teach them how to trade. I've already been working on it with my 15-year-old, and he's been stock trading with me for a while, but we're now starting to transition into learning futures, and we're going to be kind of doing some fun projects together this summer. So I'm not sure if that will be on YouTube or we'll talk about it here or on my channel, but looking forward to doing that this summer with him. So what else are you looking at today, Victor, besides gold? Or is gold has got your eye today?
Yes. Well, the what we're looking at is I've been we discussed this on GU earlier on. I didn't save it for this segment, which is longer, because I wanted to share it right away with everyone, which is the possible alignment of the weekly time frame. We already have a bearish quasi on the daily, but we don't have the weekly confirmation yet of a reversal on the weekly time frame. So that is quite high time frame, of course, and we will have to wait until the end of the week to get the confirmation, so to speak. So that is what I'm looking for. So I'm looking for entries with that in my mind, whether I'm able to look to be able to hold that through, maybe for a weekly target, if we actually get a signal, right? This is what I mean. We have a bearish quasi established uptrend, gets taken out the neckline, and it comes back into one of those two order blocks that we have, entry order blocks on the weekly time frame. But as we can see, in here we haven't gotten any indication in price action that the sellers have taken control yet. And I say yet for a reason, because in one of the signs that the sellers have taken control would be a close, this week's close, the weekly time frame, this week's close on Friday, at the end of the day, lower than previous week open, right? If that happens, very simple to check at the end of the day on Friday, did it close or not below the open of previous week? And if it did, then automatically you have an engulfing, of course, a bearish engulfing. That could be the first sign that the market is indeed reversing of that important entry order block on the weekly, right? And whether or not we're going to have follow through is another thing, but that's the first step. And if we actually get that first step and we get the follow through, then the most logical place for us to target is, the bullish weekly structure below us, and we don't have anything all the way till 1.2650 more or less. So it's a great opportunity. That's what I'm actually looking at today. These days, we go lower time frame, we'll see the reversal pattern, right? It's in trading, it's about waiting, right? And that's the established uptrend, the break the neckline. You see the fractal nature of the market. It comes back to an area of relevance for this time frame, which is the daily, and it does react from it. And we did have an outside bar here, a bearish one, indicating that the sellers are getting to the market. They are getting grip, control of the market. And that's what you want to see when you have a quasi, when you have that right shoulder coming and is being formed. You want the sellers to come in heavily and obviously, and they're doing that currently. So the daily did trigger yesterday at the close of yesterday. That could be, that's when the outside bar has definitively been formed. So that's when you can start using it. And if you did, right, you would be waiting for price at this order block. That's the daily order block. Look at how price comes back to that order block. What does it do? I don't make this up. I have to go to the lower time to mark it up. But look at this. I will go to the lower time. That's the order block that was created by the outside bar. And look at that wick. This looks like I made this up, but I didn't. Let me mark.
Victor, sorry to interrupt you. A couple times it's getting really hard to hear. I'm not sure if it's when you move away from the microphone or something, but it's been a little bit muffled. There, that's perfect. Thank you. Sorry to interrupt you.
No problem. Yes. So I'm going to. No problem at all. Let me go to the.
But your point was interesting about how the candle was going directly up to the prior close. That's what you were saying. I'm sorry to interrupt everyone to hear what you were saying.
Not at all. This is the daily I'm gonna mark the daily outside bar that was created yesterday evening, right? At the end of the day, evening, depending on where you are in the world, of course. But this is the upper order block, the upper line. I'm gonna mark it. Let me take the right tool. Right, we go to the high of that high. We mark it with this, with another color. Right, this is the daily order block that was created yesterday. And when we go to the lower time frame, what do we see? This is not coincidence. Let me take this. I have multiple there. Actually, let me take this off as well. Maybe I should give it a different color so you can see it. Let's mark it. What's your favorite color, Diana?
Turquoise.
Turquoise. It does
not
that.
On there. How about a little lighter blue so it pops a little bit more? Go up a couple.
Okay.
Maybe the top one.
This one?
One more up. I bet we'll see that one. Yeah, let's do that. Will we see that?
Sure, we can do this. Let's do it. Your favorite color. Oh, that's not what I wanted. There. And actually, I'm gonna make it a little bit thicker as well, just for its visibility for everyone. Let me do that quickly. Something like that. Actually, it's not perfectly. I need to adjust it. All right, so I'm gonna there. Now it is. Okay. So this is the daily order block, right? That was created because of that outside bar. And we go back. Yesterday, at the end of the day, was here, right? It was around here. So that means that we had, this is when the day ended. There. And on GMT, of course, this is GMT. What does price do? It comes back to retest those order blocks. Those are, structures that the market leaves behind to retest them at some later time, and that's exactly what it did. I mean, that's almost a perfect retest of that lines. Look at that. These are the two lines that I just marked, and the order block that indicates where the order block starts, right? The order block starts right there. I don't make it up. Why does it happen right there? Why does it go up, has an uptrend, only to change completely and then go the other side exactly at that point? It's because of that order block. So that's it's always amazes me when I see that, and I think it's very it helps people understand that these structures are actually reacted upon in the market. They seem like simple. I just drag a rectangle based on something I see, but it's because of the market, the price actually reacts to them.
That's pretty neat. Thank you so much for sharing that with us, Victor.
Go ahead.
Have you been using order blocks in your trading for a long time? Across
different
markets?
Yes, I have. And it's actually, order block is just it's a different way of pinpointing supply and demand. It's nothing different than supply and demand, just a very objective way of doing it. And a lot of the times when other people, without using order blocks, they indicate consolidation, previous consolidations, or even volume profiling. When you have volume profiling with the point of control, a lot of the times there is actually an order block that can be marked right there. And when I see order profile analysis, they are indicating the same order blocks that I have, which are very quickly, very simply, identified. Nothing. This is nothing fancy, as you can see. These rectangles are as basic as it can get, but that's the beauty of it. It's the simplicity.
It's objective way for you to. I think that's kind of the idea of all indicators, is an objective way for you to do the same thing consistently. So it's not so much that the order block is necessarily magic, but you are able to consistently read the market the same, or read price action the same way every single time. That's the magic, that you yourself are able to perceive the chart consistently and act on the chart consistently.
Actually, I couldn't have said it better myself. It is how are you able to improve anything, not only trading, but anything in life? How are we able to improve it if there are multiple variables at play? Like, many things happen, change all the time. It's very difficult to measure, to know what is actually making something go down or go up, if we have 10 things that constantly are changing. It's very difficult. You can't, right? So by fixing everything else remaining equal, and just having one variable, you can actually measure, is it helping me or is it not helping me? And this is what using an objective rule as the way I mark my order blocks allows you to have very objective entries and areas and rules to base your system upon.
I think that was, for me, the biggest change in really finding more consistency in performance, was being consistent in how you, whatever you decide to do, strategy wise or execution wise, having a consistent way of doing that brings consistency to your trading. That's one of the most important things, I think, that you need to find as a trader. So when you're doing, someone asked, this is a really good question, what time frame is best for order blocks? And when you started your order block analysis here, you started on the daily, but it looks like you also might have order blocks on other time frames as well. Can you tell us a little bit about
Sure, for sure. The order blocks is, as I said, it's not something magic. It's just areas when comparing two candles, because my order blocks are formed by two candles, right? The engulfing and the outside bar. Those are the two candlestick, two candles combination that form these order blocks. And these, what they indicate, very simply put, is when comparing bar number 1 and bar number 2, do we have indication that one side took control over the other? That's it. Very simply put. And that happens, that's not bound to any specific time frame. And so the message, the value, or the signal it gives you is, as I said, it's not bound. It's only to that specific time frame, but you can have the same signal in many different time frames, right? As we know, the market is fractal. What we see on the lower time frame is exactly what on the higher time frame you'll be those patterns work in the exact same way. So I started perhaps in this analysis on the daily, but I usually start on the monthly, and the reason is simply I want to, if there is a signal or a structure on the higher time frames like the monthly, I want to be aware of it. I want to know about it, because if, let's say, we go to the monthly, by understanding where we are in this time frame, I can understand where we're coming from, right? We're coming from a bullish order block and where we're heading to, right? And that gives me bearings. We're going from one structure to the other, one level to the other. That's how the market usually works. So I know we are in a monthly time frame mission to reach that level. Of course, I can't use that directly, but what I could do, right now, that doesn't really help me because we're in the middle, and it can still retrace by a lot and still reach. It can do this easily in its way to the structure. So it doesn't help you knowing what I just explained on the higher time frame, knowing where price is likely to be heading, but what it helps me is, let's say a price comes back all the way to this order block and I get a reversal pattern on the lower time frame, and then it moves out, and by moving out creates another monthly order block, or maybe a weekly. That gives me, if I am in a position there on the quasi, that gives me the permission, quote unquote, to hold that trade, or at least part of it, until the structure that the market in the highest time frame is targeting, right? So I will take the intraday trade and just close, a part of it, and have a weekly target and perhaps even a monthly target. And you can imagine that these trades do not come very often, very infrequent, but when they do come, they do magic to your equity curve.
And for anyone that's watching your explanation and they're on maybe a screen where they can't see as clearly, or on a cell phone or something like that, when you're looking at the order block and you're saying an inside bar, outside bar, are you including the wick in that, or are you looking only at the body?
The wick as well. Yes. Yes, because my way of defining the order block is I'm using the high or the low, depending if it's a bullish or bearish one, of bar number 1 and 2, and using the high and the lows, right? The extremes, you're using the wick as well.
Okay, great. And Jay has a question for you. I think this is referring to GBP. Would you be looking to buy into H1 order block for New York, or will you wait for price to get to the H1 order block to sell? Is that for GBP?
I'm not sure which pair it is. It doesn't state. But in what you want to do, Jay, is you want to, if you have to build your case, basically, right? If there is like in this case, we have a reason. We have a daily reason why the market should. This is the quasi. It breaks the neckline, comes back to this order block, and I have multiple. This is the order block that it needs to come back to, and it did. Came back, and it wasn't very clear, but yesterday it closed very strongly bearish. So it did come. It did not invalidate. And while it's interacting with that order block, it closes as an outside bar. That is a reason for me to look on the lower time frame, maybe today or even tomorrow for a short. So you got to build your case first. But once you have that, you can go back and look for those supply and demand areas. The same thing that I indicated, right? You could look for that daily order block to be retested, as it did right there. That could be a strategy. Just look for that order block when it comes back after it being created for that retest. And the other is if you go very we zoom in completely on the H4, price did create another order block, right? See that? That's the engulfing. I'm indicating this candle and that candle, right? These two candles, not this one, but that one. You can see that the close was below the open of the previous candle, meaning it's a bearish engulfing. And engulfing, in my definition, it's my definition. Everyone is free to disagree, but that's my definition of the order block. Then I drag it to the right, and that's the area that I indicate or that I consider to be in this case, a supply area. So in the next candle, you look for that retrace into that order, and it did come back and leave that wick, and that's where you need to either you take the trade from there. You could do something like take the equilibrium point of the whole area. That's one strategy. Let me take let's measure what's the equilibrium point. It's 29.33. So you enter. You could. I don't do that, but you could enter blindly there with a limit order, puts it above it, and target perhaps the low of the target. Right? That's one way that's one strategy on its own, a standalone strategy. But what I would do is I would go to the lower time frame and find in this wick, find a structure that makes sense for price to flip around or to change direction. And if you go to the H2, you would have found the H1 order block there waiting to be retested. Hasn't been retested yet. It's a fresh order block. What else do you want other that it's screaming to be retested? And when it does get there, it reverses, just as you would expect on order blocks. And if you want to be even more specialized, you can go to the lower time frame and look for those reversals on these time frames as well, and try to catch use whatever you have in your toolbox in terms of price action reading or indicators, and spot the moment the sellers take control when it gets to retest the structure. This is the H1 order block, which is within the H4 order block, which is after the market has retested the daily order block, right? See that alignment? That's when you have high probability trades, because the market comes to them and reacts very nicely to them. I mean, it's an opportunity for sure. And depending on your strategy, you will have to build a strategy where it signals, right? And it doesn't signal all the time, because no trade plan, no strategy is perfect. You're gonna miss some. It's gonna do everything and not signal you from time to time, depending on how sensitive, how selective you made the rules. But that's a different thing. The point is that price comes back to these structures and it leaves. You can see how violently it reacts to them. And why is that? There's nothing magical about it. It's these structures, these supply and demand areas that I call order blocks that the market comes to, because that's what the traders, the sellers are waiting to sell, to activate their positions. And once it gets there, as you can see, there's no turning back. It just goes, straight in the direction that you would be expecting.
Yeah, that's
it's a very
excellent.
beautiful example of alignment and order blocks. I'm not using two concepts, quasis and order blocks. Very, very, very simple. And actually, I'm going to be doing a course on order blocks in the ABL community soon. So if anyone is considering joining the ABL, it's a good time. It's a good moment to join because I'll be talking about that. And at some point in the future, I'll do one on quasi as well.
Yeah, and it seems like you do a really thorough process for the higher time frame to lower time frame, and you work through that way as well. So you have that confluence of the multiple time frames layered, so you really know where you are in the chart.
Actually, it takes some time to get accustomed to. You have to use tips or different ways to not lose yourself in all kinds of objects, because the truth is, if you never saw my screen before, my chart, you would say, wow, how do you see anything through all that chaos? But of course, you can set visibility for the objects, meaning the monthly. You don't need that on the 1 minute. You can set visibility that's only visible on the, let's say, the weekly and the daily, and that's it. And you can use that and also label your structures for what they are, and also use color, as I'm doing. By using all that, and with time. And you have to tidy up your chart from time to time as well, because structures get invalidated, structures get retested, and they're no longer as relevant as before. The market is dynamic; it's moving constantly, so you need to adjust and adapt and update the structures in the market. And I've been doing this for so long. When you have a certain routine and workflow, and you do this every day, it's easy to just focus on what's relevant for me in my case, and that could be for everyone. I'm not special in doing this. If you just do this often enough, what will happen is you will, let's say I'm starting from the higher time frame. If I go to the daily, I'm my eyes are trained that I only look for those daily order blocks. Whatever is not daily, I just don't really see them. They don't pop out. And when I go to the 4 hourly, I'm looking for those 4 hourly structures. And it takes some time to handle, but it's something very doable. It's not that difficult at all. But by understanding what's happening on all time frames, basically. Well, not on all time frames, but these time frames that I just mentioned, you can not get lost. You can know your bearings, and knowing, where am I? Where are we, basically? Where are we coming from? And where are we likely to go to? If you understand these, if you can answer these questions, we don't know the future. The market can turn around and change its idea. But given what it's given us historically, the last couple of bars, you can get an idea where it's heading. Not all these, but a lot of the time. And if you know where we're coming, where we're heading, you already figured a great deal of what trading is about. Is knowing the direction and knowing the timing. When do you enter? When do you exit? But the direction is a big component right there. And by understanding these structures with a top-down analysis, you get a deeper understanding of what is most likely. What are the probabilities? Where is the higher probability trade direction in any particular asset for that moment?
Yeah, and that's the thing, is really experience is just that's what it is. That's what it comes down to. You can learn these concepts, but like you said, when you're looking for order blocks, when you're starting out, you're not going to see them right away, but now you probably see them instantly, And so it's just that repetition, kind of like when you learn a new language. And when you're learning the new language, you have to think about each word individually. And pretty soon it just becomes more fluent for you. And eventually maybe you even start dreaming in a different language, that kind of thing, as your fluidity increases. I think that's basically exactly what you just described, how you can spot it instantly because that's what you look for all the time.
Yes, indeed. That's exactly it. It has to become second nature to you. Trading needs to become that. I mean, at the beginning, you're not sure, what to do next. You gotta write down your trade plan, to be able to follow it faithfully, because you're not sure which sequence the steps are and things like that, and that's completely normal. You're still learning, but once you know about it, it's like a bicycle. You just once you've done it often enough, you don't think about it anymore. You just do it. You hop on and you start cycling, and you're thinking about other things, not about how to move your foot on the pedals. And that's something that needs to be ingrained as in any trader. But you need to have a trade plan, a proper one, back-tested, data-driven, evidence-based, before you can do that. Because if you're going to dedicate and do this, you better do it with a solid ground, and not do it with just a hunch of a trade plan. It needs to be something solid.
I agree. And sorry, just to interrupt 1 second, to get there, it's okay to not have a plan initially and just have an idea. So not for live trading necessarily, but if you're not really sure what your trade plan is yet or what would be best yet, it works really well to just say, you know what, I'm going to trade this for a little bit and get to know this strategy and write that down. And you can either back test it, or even better is to forward test it, which you can do just on TradingView. If you have a TradingView account, you can do that for free. And that's a great way to learn kind of what works and what doesn't work. So I'm going to pop back to a couple questions before it's time for me to sign off. Thank you, Vinicius. That was really, really sweet. Fabian said, what is the ABL community? Victor, that's your community, AlphaBeta Labs, correct? And
yes, it's not my community, but I'm part of it. Yes,
okay.
It's a new community that is just starting, and I'm looking for in the background to get our, let's see where I can get the URL to share with our viewers. It's the ABL that Alex is. We have it's a brand new starting community, and it's going to be great. It's going to be in the spirit of Trump. It's going to be make trading great again.
Oh my goodness. All right. Well, you're looking for that. I'm just going to say M76BB. That's a tough name. You mentioned can't get my head around gold USD price action. It's way overbought, but it's still pushed up in Asia session. So it's got me even more unsure about trend reversals. And I think NDP, you saw NDP's comment about, which is excellent. Market being overbought does not mean it will automatically reverse. Price can stay overbought for weeks and months. Always complement that with other momentum analysis. And I think that is really, really helpful to think about that. Reversals are one way to trade, but another way to trade, which might even be more successful for you, is continuations. So you don't necessarily have to do both. Maybe you just, want to be a trend trader and looking for pullbacks and opportunities to be able to hop in on gold or whatever asset that you're looking for. Oh, this is so true. Vinicius said, I need a psychology session too. Still hard to come back to the rails again. I continue to make some mistakes. That was corrected before. Vinicius, I'm right there with you. I have many, times when I sort of like lose my bearing a little bit. And as I'm falling, I'm making things worse by maybe tweaking some things and making changes. And it had nothing to do with that, but it was just either the market was tough or I wasn't trading at my best. And it's just this continuous cycle of, getting back up, getting back to it. You can do some things to kind of restore your confidence. For me, that usually means really checking in with my thoughts and especially sizing down. So sizing down temporarily, even way down, like ridiculous small, what might seem like crazy small to you can still be a great way to continue to practice and continue to sort of it's a lot easier to find success when you're not scared about losing money or you're not dealing with fear. So if you can size down to the very minimum, even go to forward testing on TradingView, I'm sure probably everybody knows, but in case you don't, when you're on TradingView, you can create a paper account, which is excellent. I do this sometimes too when I just feel like pushing buttons, and I know it's probably not a trade that I should be making. I'll test it in my paper trading account, and that can be a great way to test ideas. If you're feeling like you just want to take this impulse trade, do it in your paper account. If you can't stop yourself from doing it, those are great ways to find out, okay, well, I'm convinced that this is going to be a successful trade, but it's not in my trading plan. That is a safe environment for you to learn. So down at the bottom of TradingView where it says brokers, there is a paper trading option.
Nice. That's a very great advice to test things out, because that's what paper trading is about, right? Testing without the same risk as the only risk you have is time, but no financial risk. I think it's a very good advice, Deanna. You were gonna say?
Well, I'm just trying to read through the comments. I don't want to miss any of there's some really good comments here. What broker do you use? I've used a ton of different brokers. To be honest, as long as they're regulated, they're all fairly similar. There's benefits and drawbacks to each one. But I think for the most part, your broker is, I'm not sure where you're located, but like in the US, there's some options. I've used like E-Trade, Ameritrade, TradeStation. There's all kinds of them. As long as they're regulated, you should be fine. What is it? Who has Thinkorswim? If you are trading options, Thinkorswim is a really good platform. I have thought that maybe I should try and just enter pullback, and if it fails, then I lose a trade, but I then wait and switch up the direction if the trend changes. Yeah, I think that just comes back to what we were saying, finding a way to consistently, figure out what it is that you want to do. And you don't have to have a perfect strategy right now. Even if you have a strategy that you just pick, and then maybe you just trade it for a straight month. Trade exactly the same. And even if it turns out at the end of the month that strategy lost you money, I bet you would learn a whole lot about that strategy and how you could improve it going ahead in the future. But there's a lot of benefit to sticking to a specific method of entering and exiting the market. Things have turned around now. Okay, so I was messing up too much, so I went back to 0.01 lots, and things have turned around now, but it's hard to do, but possible. Absolutely. And then when you get that confidence back and things start improving, then you can slowly start to increase again. And I wish TradingView was cheaper. Yeah, actually, the best time of year, probably you all know this, but the best time of year is Christmas. Actually, it's right before Christmas. Their Black Friday sale, they have a monster Black Friday sale every year, which is the end of November. So if for right now, use TradingView, the free version, and then see what the discount is around Thanksgiving, end of November time.
Actually, let me interrupt you there, Diana. There is actually a spring sale going on. We're not affiliated with TradingView. It's I think I saw something about 70% off on I think the annuals, a little less than the Black days you mentioned. Those are the great ones as well, but there is a offer going on. I'm not sure if it's still on, but I think I saw it yesterday or the day before that, where they're offering memberships for 70% off. So if you guys are, we're waiting for a cheaper way to enter and have a TradingView membership, then I think now is the time, and hope it's not over yet.
Yeah. And you can do a lot with the free version too. I was mentioning earlier that I've been doing it with my son, and he's using the free version. It's not, you can't do as much. Obviously the Black Friday deal is phenomenal. Oh, it looks like the Black Friday is 70% off as well. So maybe they're doing it twice a year now. Good to know. All right, Victor, I have to go and sign off. Thank you everyone in the chat. It's been great having you be so active in the chat. And Victor, thank you so much for sharing. So I feel like we got to hear so much about your strategy today and how you look at order blocks, and that was really, really helpful. I hope some folks benefited from that.
I feel I was laying on the couch, and the psychologist was getting into all those information for the benefit of the audience. So John says the spring sale is over.
Bummer.
Okay. All right. I think it was then just I think I saw an email not long ago. So too bad. I guess we'll have to wait half a year.
Keep an eye out. Maybe they'll do a summer sale now that everybody uses TradingView, so maybe they'll do a summer sale. And Fabian said 50 times. Someone said do 50 times the same trade and document each trade. You'll learn a lot. I 100% agree with that. I can say that for myself. Makes a huge, huge difference. And so I recommend that as well. So thank you everyone. Oh, sorry, go ahead.
Before you go on, in the ABL, the community is set up in such a way that we want to promote sharing knowledge. So everyone comes together and you can share your, strategies, your concepts, your data, whatever it is that has helped you, in an attempt to help others as well, right? It's about the collective effort of the community. And by doing so, depending on the more active you are, the more credits you get in the community, ABL that is. And one of the things is at a certain moment when you get enough credits, one of the things one of the perks is you get a free membership on TradingView.
Wow.
So it's quite nice for those who are really giving value to the community. Will be handsomely rewarded.
That's awesome. That sounds like a cool perk, and you can create your community, make some friends, and find some other trader buddies, and that's a great idea. All right, I'm signing off. Thank you so much. Thank you, Marina, Louis, Vinicius, everyone. Thank you so much for being here. And Victor, continue to get better. I will see you next time.
Thank you, Diana, and thank you for everything that you do to our community. You bring the value you bring every time you come in. I really enjoy it.
Awesome. Take care, Victor. Thanks, everyone. Bye.
Bye-bye. I hope you guys enjoy Dr. Diana with us as much as I did, because she is great in making those questions. I really can notice her psychology background, because I really felt like she was getting into the inner workings of my thoughts. Ashley, we have Ashley in the background. Ashley, could you give me a sign you're ready to be added? And I see a thumbs there. There you go, Ashley. How is life treating you today, Ashley?
Good on yourself, Victor. Trading is always good. And hello to the viewers. And yes, I didn't catch everything that Dr. Diana was mentioning with you, but the bits that I did catch are very good, very insightful, and very correct for a trader's journey. So good insights and valuable information for everyone there.
Perfect, Ashley. So, Ashley, what are you looking at? I'm sure everyone who's tuning in, this is the segment of the week that you come and share with us. You spend some time talking about the market, the charts, and everything in between. I'm sure they are, in anticipation to see, what are you looking at today? What are you have been looking at? We all know you're trading an algo, right? An algorithm. You're doing algorithmic trading, so you don't have to personally be looking out for the opportunities. Everything is automated. But what is your automated system looking at, and you as well monitoring it?
We'll definitely get into that. Just something I thought of at the moment, just to provide some insight to the viewers, and it's all about balance again. So having an EA, I think Jonatan was actually speaking about it earlier today when the session started, and I made a comment there that in every trader's journey, there's a time which you've got to recognize where you got to be as efficient as possible and use automation as much as possible. But at the same time, hand trading, which is when you actually take the trades manually with your mouse and the clicking, etc., is basically still very vital, because that gives you that insight to understand the mechanics when you do need to automate. So I've got an EA running right now, but before then I had many years of hand trading, and even before hand trading, actually phoning into the broker. So all of those adds to one skill set. But to answer your question, Victor, just to recap, I trade all the major asset classes on the 5ers, or the 18 major 18 symbols that categorize the different assets, from FX, indices, crypto, and metals and oil. So right now I'm in open 14 different positions open. 2 symbols are hedged right now. We chatted about that last week. And if you want, we can go through again what we started last week. As I mentioned, as a recap for those viewers, when I started coming onto the 5ers, I enrolled onto a 100K bootcamp, and I wanted to take the viewers along this journey as that account goes through the different stages with the algo and with understanding trading. And what we started last week was showing the results. So we can do that again if you want, Victor, or we can go into specific chart analysis. I'll follow your lead.
Yes, I think it's very insightful for traders who are, even if you're a seasoned trader, just to see how others are doing it, how they're passing their accounts, how they are, progressing. What do they do? And if you're not a seasoned trader, then it's for sure something you want to be seeing, right? You want to be absorbing good examples, like as in everything in life, right? As you're growing, as a little child growing up, you need to encircle yourself with good examples if you want to have a good upbringing. And that's the same thing that we're doing here for those growing traders, right? New traders. We want to give you good examples so that you can become a good trader, a better trader yourself. So yes, I think it's a great idea to show your project. So anytime you're ready, just let us know and we'll show you. You can go through perhaps your weeks. I think last time we talked about your stats, and we glanced over your strategy, and we went into more detail into your stats and how I remember how you were in drawdown, but it was to you as business as usual, because it's part of the game. You come and go into drawdowns all the time. It's part of how the market moves and your equity moves through time. So it's not something that pressures you or stresses you out in any way. So I thought that was very insightful. Yes, just show it whenever you are ready, Ashley.
Wonderful. I'm going to share my screen. In a moment, but thank you, Victor. I like that intro, and I like what you said specifically around the fact of sharing our insights for people that walked along the way along this journey. And something I will be also joining soon is the AlphaBeta Lab. So I think that's a excellent idea to form that community and that sharing. And I mean, we all here for the same benefits. We all go through the same things, and that shared knowledge is definitely excellent. Something as well, just to mention before we get into those figures, what I'll do slightly differently today is we're going to go through the exact same thing. And the idea for this exercise is to take the viewers along their journey to say, as you're trading along your account, your personal account, all the different programs, is to keep an eye on a regular basis, whether it be daily, whether it be weekly, whether it be monthly, in terms of results, because there's so much insight there. And what I'm going to do slightly differently today is we're going to go through the 5ers dashboard, but then I'm going to put side by side in terms of the MT5 report that you can generate from MT5 from one week to the other, and then highlight certain things and then mention two areas of stats that I find very useful and explain briefly about them, just some brief insight. So it gives the viewer some context in terms of the value of doing this on a regular basis. And the other area just to mention before we get into things is with the 5ers, it's great to have a program like the 5ers, a funded program. But the other thing for viewers to remember as well is that as you trade the financial markets, it's not just the program that you can trade. You can eventually start your own account or grow an account. So the nice thing with the 5ers, you've got different levels where you can obviously achieve and then work your way up. But at a point in time in one's trading journey, you also need to create or start a personal account, and that personal account it will be keep on trading, meaning that you won't get to a level and then just automatically jump. So looking at these stats will certainly help one along that journey and understand how to navigate and better get to the objective. Okay, so I'll start sharing in a moment.
That is, I think that's very, that's key. Prop firms, they bring a huge opportunity. We always say this, of an opportunity that, traders, upcoming traders, retail traders didn't have, 10 years ago or 11 years ago. Before the beginning of the prop firm industry, there wasn't a chance either you had capital or you had to trade your whatever small capital you had, which made it virtually impossible, because how are you going to use proper risk management if you only had a couple of $100 in your private account? And how are you going to grow that up to be, a sizable, adequate, account size to support your daily needs? That was a mission impossible for most people, if not just about everyone almost. And that changed with the prop firm industry. That's a huge opportunity. But ultimately, what you just said is so true. Ultimately, prop firm is a phase, and actually you can still continue to use it. It's not something temporary for just a phase and then you let go of it. You can keep on using it, for the rest of your life. But what you want to reach is that where you have your own capital, right? That's the goal. The goal is to be able to be financially independent, right? Having that passive income, etc., that will give you that, freedom of time and things like that. But that's not going to come if you're still needing to trade, prop firm account every day, right? You won't have that freedom of time. So in the end, the ultimate goal is to have, to build your own capital, right? Prop firm is, I believe, the biggest opportunity you have in doing so. And the 5ers is the best prop firm to be able to do that. It's going to be such a bummer after you've put in money, time, sweat, tears, and blood, only to find out that your prop firm, because you went after the discounts and flashy lights, will not pay out because they're not as honest or solid. They're not around after a couple of years. Things like that. It will be such a bummer. That's why you need to stay with solid prop firms like the 5ers, right? Pioneers in the prop firm. But go ahead, Ashley.
Thank you very much, Victor. Okay, Victor, when you're ready, you can share. Sorry, I'm just trying to look at the comments. Apologies if I did miss some of the comments. Fabian, so just to answer your comment, no, I don't use ChatGPT. It's all in-house designed. I don't have the skill set to code, so I have my own small community, and someone codes for us, and he's also a trader. So it's our own in-house developed, and that EA has been developed from our original core strategy. So we've custom made it. So it's a hard slog, but yes, with ChatGPT and AI currently available, it is easier. It's definitely easier, but it's also very important that you have that understanding of what your strategy is. Okay, right. Before we begin, just some context for the viewers. What I decided to do was start. Sorry, let me rephrase. As context for the viewers, I trade multiple strategies. I layer the different strategies, and as one layers a strategy, you've got to have a core strategy, a base foundation strategy. So with this exercise, I'm taking along with the 5ers that I decided I'm going to start with the base strategy, the base strategy I deploy and trade. And then as time goes by, I'm going to start adding the different strategies. So soon I'll be opening different other 5ers funded accounts. One would be a high stakes, where I have a lower time frame strategy. And eventually I'll add a couple more where I combine in one account or one trading account or one program the foundation and the lower time frame. So I wanted to take the viewers along that journey of how to slowly move along and how to scale up with the strategies. And then I started with the foundation strategy because the core area for the strategy the core time frame is daily. So allow the trades to move, and that's the purpose of the core strategy. So you're going to see the trading slower than what we might expect or want, but that's the whole point. It also teaches one patience, and you understand how to combine everything. Okay. So if we go into the results, again, we can see I'm still in a bit of a drawdown. The current balance is at 24,745. So it was better than last week, sitting at, I think, 24,500 or 24,600 in that region. Current equity is at 24,869. So you can see I'm not very far off from the initial starting of 25. There's the graph. You can see how the graph picture tells 1,000 words. But if we briefly look at some of the stats, we can see that I have 239 trades that's taken so far. So now you got to remember in terms of the stats, 239 trades. I'm trading 18 symbols, so you got to divide that by 18, and then you got to divide it by around about 2. That'll give you how many positions per week or per day if you want to extrapolate that the EA takes. Okay, profit trades were 82, loss trades were 157, long trades were 136, short trades were 103. Gross profit is at 1.7, gross loss is at 2, so you can still see there's a difference, negative difference of negative 251, and we can see the win rate is sitting at about just above 34%. So that just gives you basic stats, and that gives you some interesting ideas on how the EA trades and the strategy based upon it. And from those stats, you can kind of extrapolate that the strategy is very loose. The idea is to be in a trade as the market moves. Historically, in terms of this physical strategy, the win rate is around about 40 to 50%. So it's slightly below the average. But remember, the EA is still trading. I'm still within the parameters of the program. It's still continually trading. And that's a key thing to bear in mind, is that as you're looking at stats with the program or account that's still trading, you got to bear in mind of the understanding that it's still trading. So you're still gathering data. Okay. Best profit is stayed 154. Biggest loss is at negative 122. Average profit is 2154. Average loss is 12.85. Again, just to highlight, in terms of the risk, I'm risking 0.2% per symbol as a whole position, and that works out to around $50 as the account fluctuates. And you can see as the EA trades with, I've got up to 8 different areas to exit, I'm managing those losses. So my average loss went down last week from around about, I think, $20 all the way down to 12. So I'm taking a lot of trades, but those trades are being managed in many ways, and I'm bringing down my loss per trade, average loss to trade, to almost 1/5 of the designed maximum loss. And the key thing about that is it allows me to keep on trading. Okay. Again, if you can notice what I'm doing, I'm focusing a lot of the losses. And the reason for that is because if you start to embrace the losses, making them small, understanding them, you only need yourself up for immense ways to make profit. Okay, so to take the viewers on that journey. Average profit is 21.54. So if you take 21.54 divided by 12.85, my average achieved reward risk ratio is in around about 1.6, just below 1.7 as a ratio. Expectancy -105, because obviously the account is still down, and then average trade duration still around about 7 hours. Okay, so those are the stats. That's generally what we went through last week. I want to share with the viewers one or two areas about some individual trades, just to highlight certain things that I've noticed on the live streams that people like to look at. And one of them obviously being gold. So if we have a look, I'm just want to adjust the view. So something that I've noticed mentioned about gold is that if you stagger or layer your strategies, you are able to kind of stay in positions. It's understanding how to layer it and combine it. So for example, on gold, I just closed a gold trade this morning, and I was in that since the 27th of March. So from the 27th of March to today, and that took profit. And there was another gold trade that was in from the 11th of March all the way to the 21st of March. Okay, all managing the trade, understanding, and then you can add on top of that your different lower time frame trades to get in and out within the day, intraday, scalping, etc. So there's many benefits to understanding layering. Okay, let me pause for a second before we get into the next area. Victor, is there anything that maybe you want to
yes
discuss?
I was gonna yes I was gonna I didn't want to interrupt you, but yes, I was you saying you're talking about layering. What do you mean exactly by layering?
Okay, so I have this strategy is a base strategy. So the concept and the objective of the strategy is to be in a trade as often as possible, move as the market moves. So the core underlying strategy is a swing strategy based upon the daily time frame. I use other time frames in relation to the strategy to actually get the signal I need to enter, but the objective is from that daily time frame. Okay, to swing as it swings from either whether it's a rising trend, falling trend, or a side trend, whether we're moving against the trend, with the trend. The idea is for this core strategy to keep on trading. In addition to that, I can layer an additional strategy on top of this one, either in a separate account or the same account, where I can be running a lower time frame strategy, meaning that, let's say, for example, I'm long on euro dollar right now on the daily core strategy. That's been managed, that's in, it's got different multiple trades, etc. Then I can have another strategy on top of that that will execute an additional trade going with that trade, going in the direction of that trade as an additional trade. So there might be, so that is now targeted at a very quick in and out during the day, or a very short-term trade, or it could be even, depending on people's definitions, a scalp trade. So there's different ways you can layer that on top of that trade. Sometimes as well, you could even layer that trade where you could also have that trade going against your primary trade, and it acts as slightly again as a hedge, not intentional, but as a byproduct. So there's many ways one can do it.
So basically, you're saying you're taking the original signal of your core strategy, and you're, for lack of a better expression, you're squeezing it to get more out of it, because you already know that you have a signal. You're looking for other strategies that align with that strategy with that direction to get more out of the same trade idea. I think that's a great way to maximize profits.
Yes, indeed. There's other benefits as well besides just pure profit or managing losses. So, for example, even earlier today with Jonatan and earlier, who I mentioned if they could have just stayed into a gold trade. So let's take gold because it's been discussed fairly often the last couple of weeks. my base strategy, I've been in gold for X amount of days as it swings. Then on a lower time frame, I enter an additional trade, and that one I can get out of that trade very quick, knowing that I don't have any FOMO or fear that I'm going to miss out of the trade or whatever the case may be, because the primary trade is still there. I can get in and out of that second one very quickly, or not even take the second one. So that primary trade is there. I don't have any fear that I'm missing out. And at the same time, I'm being as efficient as possible, utilizing the impact of the skill. Because like you said earlier, Victor, is that one of the key objectives I'm sure everybody and the viewers is after in the skill is financial independence and financial freedom. And how is one going to achieve that if you always need to be glued to your screen? So you're not going to achieve that what you want. So it's also that foresight to understand how does one need to adapt to move their journey towards being more efficient. And again, everybody's at a different stage of their own journey.
Thank you for that. That is absolutely true. That the strategy is meant. Any strategy is meant for a single thing, and it may be only a part of the bigger picture. And I like how you're approaching, to not say attacking, the situation from different angle with multiple strategies, because each one of them has a different mission, a different purpose. One is to catch the whole movement, to be in, to catch the big leg, and the other one is maybe just a pop, maybe just today, maybe a couple of hours, and you're maximizing because there's edge in all of them, right? I mean, if you did your homework well, and you identify those edges, there you can find the edge in the swing trade, while on the lower time frame you might be opposite direction or with the trend, and each one has a different application, and it's good to understand. In the case of Jonatan's trade, that he said he wished he was from the beginning in the trade, in the bigger swing trade. That's by recognizing which strategy is supposed to catch what in the market. You can rest assured that my swing trade did or did not trigger, and my lower time frames intraday trade strategies did or did not, and you just go by their signals. And I think that's a good way to handle the fear of not, because one strategy cannot do everything. That's exactly the bottom line. One strategy cannot be. You can't expect your intraday strategy to catch those big moves, because those are higher time frames, and it's not going to happen. So you by recognizing, what a strategy in a sense is a tool. It's a tool to extract something from the market, and each tool has a moment, a time, and a duration to be used in the market. And that insight you're just explaining, I think, is very helpful for everyone to think about.
Thank you, Victor. I couldn't have said it better. And exactly that. Think of yourself as a craftsman, and you want to create this beautiful chair, for example, a wood person. You need different tools to achieve different things. And it's a very small aspect, but a very powerful one. If a trader just sits down and contemplates that and goes, okay, wow, I can still I like doing ICT, for example, but at the same time, I'm having these areas that I'm challenged with or battling with. I feel negative when I miss out on trades. So you combine different things together. So exactly. And that's what I wanted to share with the community and the audience. And what I'm going to be doing, like I said earlier, is I'm first going to separate the two strategies into two different programs, and then let that run. As that's running, I'm going to open third or fourth or etc. Then I'm going to also show when the strategies are combined in one account. So first separate and then combine, and understand how they both work hand in hand. And what are the pros, what are the cons, what are the drawbacks, what are the positives, what things do you need to be aware of and account for?
Perfect. Nice.
Wonderful. Okay, next what I would like to do is the following, is Let's move, just minimize that. Just waiting for this to minimize.
Guys, in the meantime, while Ashley is setting his screen up, I would like to remind you that there is a button that is it's in the shape of a thumb. You don't know what it means. You don't know what it makes. What is this? That's for. You don't have to know. Just click it, and trust me, it's gonna be okay.
Wonderful. Thank you, Victor. Yes, like the stream indeed. Okay, hopefully everything is showing now. So what I'd like to share with the viewers is when you compare one week to the other. So if we have a look at the screen on my left-hand side of the screen is last week that we went through in terms of the MT5 report. And then on the right-hand side is generated today. So you can kind of see from a week-on-week basis. And the idea here is to keep on comparing. Comparing is always vital. As you go into certain stats and understand figures, it's not about if a figure's high or low. It's about a comparison. Compare one figure, the same figure, to a previous time and see how it moves, see how it changes. And the dynamics, there's plenty of insight that one can gain from that dynamics. So for example, the two areas I'd like to focus on today is profit factor and recovery factor. Okay, profit factor last week was 0.69. Profit factor a week later, still with all the data, is 0.87. So it has increased. Recovery factor is negative 0.8 and recovery factor now is negative 0.36. So that is negative. But once you understand recovery factor, you'll understand why it went negative. However, the one area I'd like to mention is in relation to a profit factor. The nice thing about a profit factor is that that's the real gauge as a trader to say how well a strategy or how well you are doing. And the reason for that is because that includes losses. Losses you can't get away from. And basically, profit factor is basically taking your gross profit divided by your gross loss. So exactly at what percentage have you achieved more profit than loss, or is the loss more than a profit? So any figure from 1 means profit. Any figure of 1. A figure of 1 means profit and loss are equal. A figure less than 1, 0 point, means is that you are losing. Your losses are greater than your profits. Any figure over 1 indicates your profits are higher than your losses. And basically, it expresses as a percentage. So a profit factor of 1.1 means basically that 0.1 means you've earned, your profit is 10% higher than your losses. So it's a good gauge in terms of how you are doing. And again, it's going to move from negative 1 or below 1 to 1 to positive 1. And that's what I'd like to show with this journey I'm taking on the viewers. And then on the recovery factor, which I emphasize even greater than the profit factor, is basically your recovery factor says, if you take your drawdown, or specifically, what is your gross profit, whether it's negative or positive, and divide that by your maximum drawdown that you've experienced, it indicates to you how well the strategy can recover from a drawdown. So right now, I'm still negative because of how the accounts are performing. But I want to give insight because as week by week we go along, I'm going to show the audience as it develops from positive to negative and going through those areas. So profit factor and recovery factor are very two areas that I always look at, I keep an eye on. And specifically, I emphasize the recovery factor more than the profit factor. Okay, so just some insight to share with the viewers. I'm going to pause now. Yeah.
Yes, I think this is so vital to understand, to know your stats, because trading, the experience we get by executing, by seeing P&L up and down, doesn't give us the whole picture. You need Correct. The stats. You need to understand where your weaknesses are. You need to understand if something is changing. Sometimes it is not visible. You can't just look at the chart or think about the last couple of days to know that some averages may be going up or down, maybe going outside of their normal ranges. There is no other way than to actually go over your stats periodically, right? at the end of the day, at the end of a week, at the end of a month, you name it. You pick a frequency that makes sense to you, but you have to check them. Otherwise, you're basically flying blind, not knowing if your performance is what it's supposed to be. So I think this is very, very important, and I like how you use the metric, taking into account the max drawdown. That is so crucial for risk management. Of course, I talk about that when I talk about risk management, but it is so important to know that number. What is my max drawdown historically on my strategy, and going forward? Is it still within the ranges of what I should expect from my strategy? Because if it isn't, then something is either your data was limited, and this is having more data, you obviously will have a chance of expanding those numbers, or something is not working as it should. It could be you, the executor of the trade plan, or it could be the strategy has lost, it's not as profitable as something changed, market condition changed, or maybe something else. It might be bad execution. Maybe you're not trading with the 5ers and your execution isn't as good, or your spread, maybe your data was on your backtesting was on a certain broker, and your current broker isn't giving you the same information because the spread is different. It can be any number of things. But if you don't look at your data, your statistics, there's no way you can find out what is the cause of. You won't even know if there's much of a difference until it's much, too late. And even if you did notice it isn't as profitable as you thought, how would you figure out what's the cause is if you don't, do some quality assurance test from time to time to, monitor everything? Awesome. I like this a lot, Ashley. I think it's I know for a lot of traders, it's not as sexy, right? We want to be clicking those, keystrokes, those mouse, the mouse. We want to be in the trade. We want to be jubilant, hitting those TPs, and looking at stats is not exactly, the most exciting things. Although I do enjoy it a lot, and to me it's exciting. But I understand that for most people that's not the case. But it is understanding these things that will make you be able to hit those TPs and those milestones. So if you want to get, it's like anyone going to university, they're thinking constantly about throwing, the graduation hat to the air and be celebratory by graduating. But you need to do the hard stuff, sitting there, studying hard, hours after hours, which it may not be sexy, but that's how you get to the end point. And that's the same thing with trading. If you say, I'm not going to do back testing, no, I don't like that as much. Guess what? It's going to be very difficult for you to get to the end stage. And getting your stats is the same thing. You gotta know your numbers. Otherwise, you're, trading as it is already very difficult. And if you're not going to do your job, and I'm sorry to be the one telling this, but it's going to be, very, very difficult to be wants to get profitable. And even if you get it, to maintain profitability if you don't do things properly. Awesome.
Perfect. Thank you, Victor. I'm going to get to Venicus's question in a moment, but something I'd like to add there, just some insight and from my personal experience. It's actually so amazing if you understand some of the stats. And the reason why I say that is because naturally as human beings, we like you said, Victor, it's like sexy to go into the charts and click that button, get into the trade, see the prices move, see that profit, see that loss, etc. But at the same time, when you do analysis on the charts, technical analysis, it's more of an art than an exact science. So even if you had all your technical analysis, you dotted your I's, you crossed your T's, you've put everything, you've tried everything, there's no guarantee that trade will work out the way the probability is pointing. So there's still a large factor as a question mark, okay? However, if you look at the stats and the data, the stats and the data give you insight to what's working, what's not, and they start to slowly change your understanding of how to view charts, whereby actually there is that probability, but it could also go this way, and this is starting to work better than this. So it's definitely a mindset change, but definitely well worth it. In my 27 years of trading, once I managed to get into understanding stats, it was an absolute mind-blowing moment. It just flipped everything on its head for me, and it became much clearer, and I accelerated 10 times the amount that I did in my trading. If I didn't actually look at the stats, I wouldn't have accelerated as much. So definitely it's something to really look at. Okay, from the question that was asked, I'm not understanding where he's getting the 30.2 and the 0.98. But what I'd like to show him is the following: is if you take this profit factor of 0.69, how do we get 0.69? We take the gross profit of 1090.8 and divide that by the gross loss of 1582. Okay, we don't have to worry about the negative. Well, actually, sorry, you might have put in the negative, because that gets to 0.68. So that would be the 0.69 there. Okay. And then you do exactly the same on this side to get the profit factor. Then in order to get the recovery factor, and here's the interesting part, is you have to take your total net profit, which is negative 491.2. Going to put that negative, and you divide that by the drawdown of 613.80. And that gives you 0.8. Okay, so it's a negative because I'm still as a negative total profit. Then on this side, you do exactly the same. Now, the reason my recovery factor dropped here is, if you have a look, the drawdown was higher. So my drawdown was higher from last week, about $100 higher. However, the net profit was less in terms of, I was negative 491 and there was negative 254. Okay, so that gives you an idea. So recovery factor negative 0.36 is actually is positive. It's not negative. It's working towards zero and into a positive. So the figure is lower, but it's actually positive. Okay, so that just gives you an idea. Hopefully that's answered the question, because I didn't understand where the two figures came from that he mentioned.
Yes, I think the profit factor, if it was 31st and then later went to a little less than 1, that means that previously, because the profit factor, what it gives you is the ratio, right, between the total wins, the total winners, wins, the gains divided by the losses. So if you had 30.2, that means that apparently in that period you had, in comparison to the gains, you had very little losses. Perhaps you have a high win rate strategy and you haven't taken the loss yet, right? Maybe someone who's trading at 80%, 90% strategy and only had like 20 trades, and on average should have had perhaps between 1 and 4 losses, but it fluctuates. This frequency fluctuates in time, so you might not have your fair share of losses based on your win rate yet, and that will give you, or you might have just cut short specifically those losses and not taken the whole loss. Everything that makes the loss smaller, and if the rest is all winners, then you're going to have a very high profit factor, like 30 or even higher. But with time, that's the number that actually tells you a more complete story, because the more trades you have, and that's why we emphasize on having a big enough sample size, because if you only measure statistics, let's say 10 trades, although it may give you an idea of profitability, it's so limited into the information it gives you. It's much more complete when you have a couple of dozens to begin with, but actually that gives you a better understanding. But to really be sure and to put money behind a strategy, you have to have more than just 40, 50 trades. You got to have, I would say, a couple of hundred trades to begin with. Then you have some indication, and even that is it only gives you a certain period. It doesn't tell you about how it performs on, let's say, stress situation, election moments, or some crisis happening. And these are important for your longevity as a trader as well. So you understand that this is, just looking at 10 trades. And I'm not saying that this is the case, Vinicius, not pointing you out, but I mean, this is more in general. A lot of the traders, they want to, it's good. I think it's good we look at those trades, even if it's 10, because it's telling you something. And if you're on a roll, sure, extract positive vibe out of it by understanding that this, you're doing well. But let's not forget that we need a good sample size to really say something meaningful about the trade, about the trading plan long term, about the strategy. And perhaps, Vinicius, what happened with I don't have more information about your account, but what could happen as well was, okay, I see that you have posted on the dashboard. I will check it out, Vinicius, and perhaps I can on AlphaBeta Lab is talk about it or write something about it. What can happen with the profit factor if you have let's say you're at the beginning of an account and you had a couple of good days or a few weeks, and the profit factor is above average. What happens if you go in a drawdown, right? Something that happens once every year, perhaps, but it just happens to be that period started now, and you have no control of when those drawdowns periods start, right? It's something natural that happens with every strategy. While you're in that drawdown, of course, your stats will look not so great, but it doesn't mean that your strategy is necessarily, not profitable. It just means that you're going through a rough patch and you're not seeing the whole picture yet. So by waiting to get more data, you can know for sure if this is just something temporary, it's just market condition, it's just a drawdown that you will have every so often, or it's actually something more more negative in the sense that the strategy doesn't have edge anymore, for example. That would be something that you want to be careful with or watchful for, because and the only way to do it is to having the data, right? Because a strategy, depending on how the strategy is designed, may or may not have an expiration date to it. And that's something we need to understand. I don't say that every strategy will expire, but that's a real thing. Some strategies only work during certain period, and that period can be long, but still at the end of that period it will stop being profitable, and you need to know this, and to know this to stop trading it, and the only way to do that is to have your stats, all your numbers, and recognizing when it isn't giving you what you expected.
Correct. Nice insight there, Victor. Thank you for sharing that for Vinicius. But you're quite correct there in terms of the detail that one needs to go through and that process. And it's all I find a very positive process.
Perfect. Nice. I see you have your stats, your charts, I should say, in front of us.
So just to share with the viewers the trades I'm currently in. So if we start with the FX, Euro dollar, I'm hedged right now. Cable dollar, I've got a short currently on. Aussie short, Kiwi short, dollar CAD long, dollar yen short, dollar Swiss long, Bitcoin and Ethereum long, Oil long at the moment. Gold, I came out of the gold trade earlier this morning. So the next opportunity that my strategy will look for is potentially a short, to see that whenever it happens. If it doesn't happen, I'm not going to participate. If gold goes further higher, I'll be looking at the next area to go short, and then after the short, potentially go long again. Depends on how gold unfolds. Silver, I'm short right now. The US 30, the Dow Jones, no position. S&P 500 short, NASDAQ 100 short, the Nikkei 225 short, the UK FTSE 100 hedged, and then DAX I'm short right now. And then every time I am either long or short a particular symbol, the EA, the strategy is busy looking as the charts develop, as that symbol develops, it's looking for potentially things to develop to take the next trade in the opposite direction. Manages the current open one. I've got 8 different levels how it manages, 8 different areas for it to manage, and then from there it looks for the next trade.
One question, Ashley,
Yes.
the layering that you were talking about earlier.
Yes.
These are automated strategies as well?
Yes, correct. So right now, in terms of this account, it's only the foundation, only the daily strategy that's on. In the daily strategy, I also split the trades, like we mentioned last week. So I split my position into 3 trade orders, and that is just for the daily. So this is just one strategy on this account. Just because obviously the account size as well, there's not enough funds to start layering because of margin requirements and the leverage of the program. But as I develop, as I go through the process and the different challenges and the different layers and the different levels, depending on this account or other ones that I'll enroll in, I'll start either the lowest timeframe strategy and then take another account and add both together. But then that account, a physical account, needs to be higher to accommodate all the additional trades that's going to take place.
You mean a live account?
Yeah, on the 5ers. So I'll take 5ers and even show, I've got several other accounts running as well, but to show that might be a bit confusing because of not understanding the context. So I thought for the viewers, I'll start a new one and take them along that journey.
I understand. You want to keep it separate so you can show each one doing its thing separately.
Yes, then I'll combine it as well.
Perfect. Awesome. We're getting near to our end.
Yes.
Ashley, there's about 4 minutes. What else do you still? Is there something you want to share before we get to the end?
That's basically it. We only got that 4 minutes, but it's just to share with the audience in terms of what I think it will be, to share my experience in trading and expertise with so many years, and to take them along this journey. So stay tuned, keep an eye, and ponder. It takes some time to really think about certain things. I always don't negate anything that somebody tells me about trading. I may not realize the benefit, if at all, straight away, but I always go back and I think to myself, I apply myself and say, whatever that person said, does it make sense? How would it apply to me, etc.? So at times when you're trading, you kind of set in your ways, but take that time in your own personal space. Think about whoever's on the 5ers is mentioned. Take the time, think about it, and go, oh, actually, that is good, but maybe you don't prefer it. Not a problem. Or maybe that's good. Let me try and see what I can do to apply it. So that's the last thing I probably would like to share with the audience for today in terms of that. Those gems that you take out for all these hours, take one at least. Go back, ponder about it, and see if it's going to make a difference in your life and in your trading journey.
Well said, Ashley. I think you are doing a great service to the community with everything you're sharing. Of course, we have news coming up in 2 minutes, so I'm going to leave this chart open for while we're still, getting to that news, and we'll be signing off shortly thereafter. But coming back to what we're saying, I think it doesn't sell as as well in terms of viewership, in terms of clicks and likes, like, you know, flashy cars and that, you know, not existent, or well, let's just say flashy cars and flexing, do not say something else. But you know, it doesn't sell that well because that's the reality of the situation. You know, what attracts people usually is not what makes you a good trader. And it is these things that are the building blocks of a good trader that will have longevity in this profession. These things that are typically not as attractive to, you know, to the public, to the viewers. So I think you're doing a great, you know, the community a great favor by showing, you know, your process, how you go about your stats, what you look for, and give them some reference, right? Okay, this trader does this. Maybe I should look at my stats as well. Okay, what does my stats tell me? And as you said, don't take our words for it. Test it out. Test it out for a couple of weeks or months. Look at your stats and see if you can find something that helps you trade better, or you know, customize or adapt your system, your strategy to this new insight. That's something you can apply today. You can start today looking at your stats, and the dashboard of the The5ers is a great place to do that. But there are also other places, other websites where you can find this information for free. My FX book is one of them, very popular, where you can upload automatically your account stats and dissect them in more ways than is possible in a dashboard. Even though the dashboard has great tools and metrics, there are more possible with your data. And I'm not even talking about premium memberships that other websites offer. Just saying MyFX, which is a great place for beginners traders to start their journey in excavating gold nuggets in their data, because that's what you're doing. You're getting information that you can make work for you, or increase your profitability, in the end make you more money. So I think you're doing I really enjoyed these sessions with you, Ashley. I would like to thank you on behalf of everyone. And today is the 1st of April. We didn't do an April Fool's joke. We didn't. But I would like to invite everyone to join us tomorrow. Tomorrow will be packed full of information as well. Experience honest, authentic traders, as you can see, right? No fancy, flashy Lambo. Real stuff, authentic, the actual real life examples of the traders. So join us tomorrow. Hit the like button, subscribe to our channel, and become a better trader. See you guys next time. Bye-bye.
Thanks, Victor. Bye-bye all.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The5ers. We'll see you in the next one.